all the time. Once you recognize this, the world starts to make a lot more sense as you observe both your own actions, assuming you are smart, and the actions of others. In this chapter, we'll delve into some of the ways that even the smartest traders act irrationally, and then we'll try to find remedies for these biased behaviors. In Chapter 3, you learn that superior performance on the cognitive reflection test, CRT, predicts trading success. In other words, traders that rely on System 1 and heuristics, thinking fast, will underperform traders that favor System 2 and logic, thinking slow. There's a conundrum here, though. Trading requires fast decision-making. The alpha trader needs to make quick decisions that are not contaminated by behavioral bias. There is an inherent conflict here, obviously, because fast thinking generally relies more on shortcuts, while slower thinking relies more on rational logic. In this section, we'll discuss a host of behavioral biases and then think about how to counter them. High-performing traders understand behavioral bias and are self-aware about how their own bias negatively impacts their decision-making. They know that even the best, most knowledgeable trader is subject to many types of behavioral bias. The amazing thing about most behavioral bias is that it works on you, even if you know about it. This is similar to the way optical illusions work. Even if you've been told about the exact way your thoughts are malfunctioning, it doesn't matter. I can tell you there are no gray dots in the intersections in the image in the PDF, which is an optical illusion, but you'll see them anyway. You're a silly human, just like the rest of us. Trader bias number 1, overconfidence. Quote, "The only thing I'm 100% sure of is that anyone who is 100% sure of anything is not worth listening to." End quote. Matt Gittins, well-known FX Spirit Guide, 2019. As mentioned in part 1, overconfidence is the most important and most devastating bias in trading. The line between confidence and overconfidence is wafer thin. Confidence is critical, but overconfidence is deadly. If you think all your trades are 5-star, home run, amazeballs ideas, your ability to determine the expected value of those trades is likely to be hampered by this overly rose-colored view of the trade's prospects. Overconfidence leads to overtrading, poor assessments of probability, and rigid, closed-minded assessments. Overconfident traders are also less likely to explore alternative hypotheses and will embrace confirmatory information much more openly than contradictory info. Overconfident traders take too much risk, trade too frequently, behave recklessly, make poor assessments of probability, do not keep an open mind, overweight evidence that confirms their idea and ignore evidence that does not, fail to consider alternative hypotheses, and refuse to admit when they are wrong. In the 2020 Super Bowl, the San Francisco 49ers were up 13-10 early in the fourth quarter. They intercepted a pass to take a commanding 20-10 lead, and the entire 49ers defense ran into the end zone for a show-offy celebration and team photograph. Even if you're not an NFL football fan, you can probably guess what happened next. The opposing quarterback, Patrick Mahomes, put up 21 straight points. Kansas City Chiefs won 31-20, and Mahomes is now one of the best quarterbacks of all time. The San Francisco 49ers were reckless and loose. They failed to consider the alternative hypothesis that they might lose. A less cocky team in that spot would be thinking about finishing and winning the Super Bowl, not assembling like a group of clowns in the end zone while the opposing team game plans the next possession. There's nothing more dangerous than a team that celebrates as if they won the championship before the game's over. By the same token, there's no trader more likely to dump a huge wad of cash than the one who pumps his fist celebrating a trade he has not squared up yet. Perhaps surprisingly, research shows that the more difficult a task, the more overconfident people tend to be. This is obviously a problem when it comes to finance, given its extraordinary challenges. Research shows that training and experience can reduce miscalibration of confidence, but only to a minor degree. You must appreciate and understand that we all tend toward overconfidence. Remain humble and do your best to consider what you don't know or might be missing in a given situation. For a fascinating read on overconfidence and miscalibration, Google Calibration of Probabilities, The State of Art to 1980 by Lichtenstein, Fischoff, and Phillips. Not only is the paper full of interesting insights, it was scanned from a typewritten document presented to the US Navy in 1981, so it has a cool retro vibe, and it's not boring. There are 3 types of overconfidence. 1, overestimation, where people tend to overestimate how well they perform at a task. 2, overplacement, where people grossly overestimate their rank or placement among others. This is also known as the better than average effect. Most individuals think of themselves as better than average at most tasks, even though it is not mathematically possible for more than 50% of individuals to be better than average. There has been considerable research on this topic. One of the earliest studies showed that 93% of people surveyed in the US and 69% of Swedes thought they were better than average drivers. And 3, miscalibration. This occurs when an individual believes his ability to estimate something, say the price of a stock, is better than the reality. His confidence interval should be wide, but it's narrow. Research shows that overconfidence can have positive consequences in many aspects of life. Overconfidence helps with ambition, morale, persistence, and helps individuals signal a better than reality level of skill or knowledge to peers. Overconfident people are viewed by peers as more confident than properly calibrated people. On the other hand, when it comes to trading and investing, overconfidence is unambiguously negative. There's so much research showing that overconfidence leads to negative outcomes in both trading and investing that it's hard to know where to begin. The first study I want to discuss uses miscalibration to assess subjects' potential overconfidence and then compares that to their trading performance. A standard psychological questionnaire to measure calibration asks subjects to give a low and high estimate for difficult questions, such as Martin Luther King's age at death, length of the Nile River in miles, number of countries that are members of OPEC, number of books in the Old Testament, or weight of an empty Boeing 747, and so on. Properly calibrated individuals will write down low to high ranges that include the correct answer most of the time. Overconfident or miscalibrated individuals will answer with ranges that are too tight and often do not include the correct answer. In the study, subject miscalibration was measured and then subjects were grouped into quartiles from most to least miscalibrated. The subjects were then placed in an experimental asset trading market. At the end, trading profits were checked against miscalibration to check for a relationship. As you might guess, there was a strong relationship. Miscalibrated individuals performed worst, and well-calibrated individuals killed it. And there is a graphic in the PDF if you want to see the relative differences. This gets at the idea of knowing what you know and knowing what you don't know. If you have no idea about an answer, you should answer with an extremely wide range. People that don't have a good understanding of their own lack of knowledge perform poorly in this trading experiment, and I believe these experimental results match real-life outcomes. It's important to know what you know and also to be humble about what you don't know. As Mark Twain or Josh Billings or someone once said, it ain't what you don't know that gets you into trouble, it's what you know for sure that just ain't so. Alpha traders have intellectual humility. Prolonged time in the market inevitably beats the overconfidence out of you. Traders who have survived for many years understand that no matter how smooth the sailing is right now, there's always another storm just over the horizon. No matter how much you know, you barely know anything. The study I just referenced shows a direct connection between miscalibration and trading performance. There's often a more indirect connection too, as overconfidence leads to overtrading, which reduces performance through higher commission or bid-offer spread paid, plus reduced trade selectivity. Patient, well-calibrated, and aggressive traders will trade less often than impatient traders who always think the market is wrong and they are right. Properly calibrated traders understand the public signal, the market price, is probably correct most of the time, and they need a very strong reason before believing in the superiority of their own private signal, their alternative view of where the price should be or where it's going. If the market was always right, you could never make money. On the other hand, markets are generally very efficient. They are usually right or correct themselves quickly. You should always give the market the benefit of the doubt and think about what you might be missing before you decide to challenge the wisdom of the crowd by entering a trade. Another excellent study conducted in 2001 looked at 6 years' worth of retail discount brokerage trading records for more than 35,000 households. The study concluded that men executed 45% more trades than women, and this overtrading was the primary reason women outperformed men by about 1% in net returns. In another study, researchers measured subjects' confidence and then set up 10 experimental asset markets. They constructed some markets of overconfident traders and some of people with a more rational view of their own abilities. Prices in the rational market tracked the fundamental asset value fairly accurately, while the market of overconfident traders saw higher prices, greater volatility, higher trading volumes, and more bubbles. Anyone watching the NASDAQ in 1999 or Bitcoin in 2017 and 2021 can see how this experiment is an accurate reflection of reality. Overconfident.
Boom, boom, boom. Oh my, we got different color hats. Can you hear me?
Yeah.
Yes,
What's
yes,
up,
yes.
GP?
Yes, what's going on?
What's up, GP? How's it going?
Doing good. You? Can you hear me well?
Yeah, I can hear you. Can you hear me?
I can. Let's see. Boom, boom. Got the blue hat on.
Yeah, I went with the blue one tonight.
No, I was sorry for the late coming there, guys. I was helping stragglers get in. The anytime we do them like this, where we do them fast, it's logistical. And then at the same time, we're using a different platform than I like this way better than Zoom.
Yeah, this is way better than Zoom.
Zoom is complicated. I'd seen this on here before, but I'd never tried it. And then the other day I did it where more than 2 people. Let me see. Where? What are you talking about? Let's see. You see the chat, right?
Yeah, I can see it.
Let's see. Nice.
Yeah, I can see the chat and I can see you and me.
Okay, cool. Yep, you see them. Now I'm just making sure everything's working before we get going. The other day I recorded for like an hour and it wasn't recording.
Damn.
So it's a good practice run, man. Let's see. Okay. Oh, you hit yours on a private chat.
Me?
Yeah. Yours says hi everyone, and it was on. It says it's on private. Click. You see the comment box to the. Do you see one at the top right there?
It says chat with everyone in the studio.
Yeah. Click. Because yours is different, right? You're on a pad.
Yeah, so if I click the chat, it comes up.
You see all the people.
Yeah, and then I can click another button where it lets me chat, but it just says chat with everyone in the studio. I don't know if it lets me talk directly with them. I just said hi again.
Yeah. Click it. Just. You can't click that.
Click what?
Yeah, it shows me that you're talking in private. There's nobody else in there but you.
Yeah, so when I go to the chat, it doesn't
Yeah.
let me type in it.
Really?
I can only see it.
Huh. I wonder why. Give me just a second, guys. We'll get this going. JC, we got Calvin in here. We got Mac, JC, Nick, Rich. What's up, man? Dean, they say, yeah, they don't see it. I wonder why it's doing that. Let's see. I don't know. Oh, well. It does not matter. Oh, well. But you're on a pad, right? That what you told me?
Yeah.
Yeah, because mine has two different, it has a private chat and it has comments. It has both.
Yeah, mine only has the comments and then a private chat.
Yeah, so when you click, are you on comments right now?
No, I'm in the chat. So if I go to the comments,
It doesn't let you type.
no.
Wow. I wonder why that is. Because you're here by invite. They're here by a link. Maybe that's why.
Maybe.
Oh, well. Yeah. Okay. Well, if you see good questions, I was just going to have you interact with them if anybody had questions while we're in the middle.
Okay.
But somebody said, here's somebody from Canada, man. Hey, guys, thanks for coming in this pop-up webinar. Last time I did one was August 6th, and it just so happened to be the bottom for this current run on Bitcoin. You know, I try to do these when I think it's timely, when it makes sense. And I tried to find, I told you, let's see. Can you see my screen?
Yeah, I can see it. The spy.
Yeah. So you guys probably know to pretty much everything in the stock market comes down to the S&P 500. All investments are judged by the S&P. The actual SPY on stock charts would be $SPY. Or no, what is SPX? Excuse me. $SPX. And that's the actual S&P. 5,969. So we hit 6,000. You know, and all this is pretty much what all investments are judged by. The SPY typically, what, 9% a year. It just depends on when you start. Thank you for recording this for us. Yeah. So if you guys, you know, if I'm sure we'll go longer than I usually think I will, and this will be recorded, and I'll send that out to you tomorrow by email. And I'm gonna put some other stuff in there, some notes or anything maybe we miss. And then I've got a couple of videos that I've already done. I'm trying to find one. I was telling you, and we'll talk about that. Where, you know, we were referring to this in my mind. The way I see this is more of a business than investing. I mean, you know, and I've gone back and forth with people on me using that term because, you know, you're not taxed like a standard business. in this strategy, when you do pay taxes, if you're, most people are going to be outside a tax account, it's going to be taxed as income.
Yeah, you're just creating like another stream of income
Right.
that
And
you
that's
can
how
use now. It's not retirement.
right. And that's how I would think about it. Now, other people, you may come up with strategies. Maybe you come up with some strategies. And I actually own a couple of funds in my SEP IRA and in my IRA. But as that went forward, I was like, I don't know. And I just decided to move them. I started moving them to my cash account. And that's when I started on this journey of what we're going to talk about here. Let me change my background. And like, it's kind of weird to have yourself behind yourself. What are we thinking, man? I like the little
The mountains.
I don't have mountains, although this is actually at my condo. We'll go with that.
Yeah, that's real.
Yeah, that's a real picture. Yeah. And then I own that, and I got most of that from trading during before the crash, when the same man who's president now was president then, and we went on a hell of a run in the stock market. So, we might have that now. And the wind will be at our back, and I don't know if you're seeing the articles right now where he's talking about they're talking about taking Bitcoin and making it part of the national treasury.
Yeah, I saw that.
Come on, man. I can't believe, So, and we'll show how this all ties into what we're talking about. But this here's more what we're going to talk about. While it is stocks, and some of it is using, we're primarily looking at buying closed-end funds. And closed-end funds aren't the same as an ETF. I mean, you understand that, right? They're closed. They're an ETF continues to add shares as it expands, as people put money in. As people add money to the gold ETF, they go out and buy more gold. They actually own the underlying asset.
Where the closed-end funds have fixed amount of shares.
Right. They have fixed amount of shares, so it trades like a stock. And because of that, we saw that when you remember that fund GUT, GUT, and GUT came down, and I think they sold some shares too, right? Or they not sold shares, but they
did the rights offering possibly.
Right. Where they were going to issue new shares. Now, I mean, look what happened. This thing came down, right? Each one of these bars is a daily chart, but look at this pattern, dude. I mean, on a bigger picture, it's just a hell of a money flow pattern, huh?
And they tell you when they're going to sell the shares.
Right, which is why you had this massive gap open, probably because the people who get the emails, and we're going to kind of talk about that in a minute too, they're selling there, and then everybody else is selling the next day, yeah. And so as price comes down, the yield on this goes up. You get that, right?
Yeah.
Price goes down, the yield goes up. So people could have owned this fund here, and let's say they hold it, and then look at that doji right there. Hey, right at the bottom. Isn't that crazy?
Yeah, it's perfect.
And even though I was saying that I'm treating this more like a business, if you have trading skills, and and I would encourage you to learn some, it will really add value to to this strategy and what we're going to show you here. I mean, that's actually almost the exact bottom, huh? I mean, it's
pretty
crazy.
much.
Yeah, it goes up. Even when it comes back over here, you see another one.
Yeah.
You got a little thing down. It came right back, man. When it comes back, that's your signal. As a trader, that'd be my signal. And obviously, there's your target, 200. I mean, it's just like day trading, huh?
Yeah.
Which can tie into what we're going to talk about in this strategy too, in a more advanced version of it. But if you didn't own this stock, and you're doing what we're going to be talking about. I mean, this is when we started watching it, right?
Yeah.
Right. And so now, let me see if I can pull my account up. Are you in the green on that?
And gut? Yeah.
Yeah. I wasn't for a minute.
Yeah, me neither.
Did that scare
I believe
you?
I am now. No.
You weren't terrified?
No.
And so
I
I
believe
kind
I'm
of see
green now.
you're in the green now. I see that as you were adding to your store. You know, I see it as almost like a store. And in this store, we have shelves. And on these shelves, we have different things. And the same thing kind of goes with on that shelf, right? Like you go into a store, they don't have just shit rando everywhere. It's kind of goes in a pattern, you know, and that's how I see this. And you'll see as we build it out and we add things, and we're going to use some terms called anchor. You're going to use some terms called portfolio, closed-end fund. There's a difference between that and a REIT, right?
Mm-hmm.
And an MLP. These are different. A lot of people may not know this. If you own some of what we're going to talk about here in outside, you're going to get tax forms. You know, you're going to get like a K whatever, or I forget what they even call them. And you know, you're going to have to put that on there because if you're making $90,000 a year, the IRS wants to know about it. You know, that's, you know, sometimes people will say, well, almost like they don't want to earn the money if they have to pay tax. But I mean, you have to pay tax at jobs, like, don't you? I mean,
Yeah, it's the same thing. I don't understand.
yeah, I don't. Yeah, some people are like, oh, I don't want to do that if I got to pay taxes. It's like, bro, you're not paying tax on the whole thing. You're paying tax on a percentage of it, man. He says, I need to know the money flow method and trading skills to understand what we're about to learn. I'm new to the stock market as context. Man, I think you need to learn quite a few things fast, right?
Yeah, he doesn't necessarily need trading skills, just
Right.
learn what margin is.
Right.
And income funds and what kind of different funds there are that pay.
Right. And
monthly.
What we're about to show you can take it to more and more and more advanced levels, or you could be just, I mean, once a week. I mean, you look at it really. I mean, I believe that most things don't move that much in a damn week. It seems like it to me and you, because we're on a minute chart and an hour chart. But how many times
if you actually buy the right funds and hold it, I mean, you can do it.
Right. Your account's at what? You have less than 35,000 in there, right?
Yeah, I got about 34.
And the dividends are what, like 17?
Mm-hmm.
That's a lot, like 50%. Right?
Yeah.
Yeah. Yeah. And so there's risk obviously in that. Anytime you're getting a higher return, there's risk. And you know, anytime you're borrowing money, there's risk. I was telling you earlier today, let me see if I can show you this. Let me show you this. And I'm gonna find this video. I'm gonna send it to everyone. I'll load it onto YouTube. I'm gonna send you a PDF when we're done with some of this stuff. I always forget things. Or says the average. You can see my screen.
Yeah.
The average loan amount for the Small Business Administration, the SBA, 2023 was. This is crazy to me. $391,584. But as of March 2024, it was $458,000. Damn.
Wow.
That's a lot, right?
Mm-hmm.
Right. Okay. So if we take that money right there, we borrow it from them, and then we do what we're going to talk about. It's like almost 40,000 a month in dividends.
Yeah, it's crazy.
And I don't do math very well, but it looks like you could pay it back in 10 months, right? Now, I'm not advocating that, but think about that. You know, the market has to not explode in nuclear war, and we don't have a complete meltdown in 10 months, and you paid them back. And we're going to talk about how to protect yourself from that, because some of the stuff we're going to be looking at, these are new funds, man, right?
Yeah.
I mean, there's people in here, though, these funds have been around the entire time they've traded, right? So if Tesla has been around almost 2 years now, at least 18 months. So if you've been in the market 18 months, for as long as you've been in the market, there's been funds paying 50%. That's pretty crazy. Like crypto too. The returns for people got a little skewed. Campbell's paying 2.5%. It doesn't sound that exciting.
Yeah. Crypto returns are ridiculous compared to like
Yeah.
Campbell's and dividend stocks.
You have to separate your mind. You have to understand what it is, but also the risk there is the same, right? I mean, typically Campbell stock isn't going to drop by 70%.
No.
Right. But would it shock you if XRP dropped 70% and then went up 50 and then went up 100 and back down 30? I mean,
No.
that would just be a week. That's just trading crypto. So we're trying to say, that's a different risk parameter. So if you're over there playing with that, you need to have a different hat on. You need to be thinking about it. So let me pull my account up here. Now, if you think of that image that I was thinking about and I was using, I had a guy text me and he was talking about risk, and obviously we're not financial advisors. We're not any of that. And I'm just showing people what I do. That's all I've ever done. I'm not a real estate agent. I don't have a fucking broker's license. I've never been trained to teach a class. I didn't finish college. I just live in a free country where you can talk. And I would just do things and then learn it. And then to learn things, I would ask people questions. It's not fucking complicated. And then I would try things, and you've got to have something to judge. Wouldn't you say if you got $10,000, you're going to invest it, you got to judge it against something, right? So if a guy says, here's guaranteed 5%, would you take that? I mean,
No.
knowing what you know and the skills you have, would you want to do like a 5% CD?
No.
Yeah, that'd be crazy, right?
Yeah, crazy.
Yeah, that's crazy. You're not going to do it because you have skills, and that's kind of what we show. But is there any problem with having a portion of your money in a 5% CD? No. There's different things, There's houses, there's apartments, there's duplexes, and same in the market we're going to show you. There's different things. I was looking, basically what we're going to talk about here is building a dividend portfolio, but we're going to use margin. And I've blown out margin accounts. I think I told you 5 of them.
Yeah.
Yeah. I may be underdoing it too, man. I ain't gonna lie. And I think, and I've told this story. I probably lost 70 grand learning to trade. I would do futures. I was doing commodities. I'm calling it buying fucking oil contracts. I don't know what I'm doing. Then I'm doing options and Forex. And then I would do, I even started doing binary call options where they're daily. I mean, just ridiculous stuff, just because it came out. And, some of that stuff I'll just try because it came out, And, even now I trade option or futures. But
On
the
Coinbase.
way I trade futures now is light and day from the way I traded it when I was your age and learning to trade. And, and I always think, man, what if I'd have met me like you did? You met me. And so I've already blown out them. I've already know what not to do, what doesn't work. And I can show you, okay, hey, this works. Maybe you can improve on it. And so for day trading, I had a separate account. And you have to have $25,000 in an account to really day trade and trade options and just do whatever you want to do in the stock market. You can sell short. I mean, you could just lose your money 5 ways if you want to. You can get nervous and buy puts. You could buy a triple leverage inverse and then buy call options on it, which would actually be like buying puts on the QQQ.
Yeah.
Yeah. So you could take a credit card, borrow money, put it in there and buy call options and a triple leverage Qs. I mean, that leverage is available, in the markets. That, but also we have that too, as in, are we going to get to the strategy? He says he's anxious. I guess, hey, Steve, what I'm trying to build and explain to you here, that through this process it's risk. Being in the market is risky. When COVID happened, I had 3 stocks go to zero. 3. 2 of them were stocks I didn't talk to the money flow gang about because they were highly leveraged and they were doing a certain thing,
And one of them was supposed to be like safe, like a leveraged fund of closed-end funds or something like that.
Right. But prior to that, I've had 3 stocks go to zero. Now I own 118 stocks. So, we were talking about that earlier. So a guy texts me and he's asking all these questions, basically what the whole damn webinar is about. And he's like, well, I'm going to put my whole life savings in. I'm like, bro, come on. You're going to put your whole life savings on a guy on fucking Instagram showing you something? Like, that doesn't even make sense, right? When I first started telling you about it, you were like, yeah, right. Like, you didn't do it. Yeah. Trying to find this guy's thing. But you didn't jump in it immediately, And so, everyone here, like, you should make sure you understand what you're doing. Make sure you understand what you're buying, right? And at first, when you heard margin, you heard, man, don't do margin because almost everybody blows out on margin.
Yeah.
And I did too. But you have to have a margin account to be a day trader. And so I would keep 30 grand. That gave me a cushion. Anything over 30, I would sweep to my SEP IRA or my IRA. That was usually what I would do. Or I would take it home. So I would day trade to get money in my retirement account so I didn't have to save it,
Yeah.
Yeah. And then, I'm going to sell some houses. The reason I'm saying this is I think the reason you start doing something is important. I didn't start doing this because I met me. Like, the reason I started doing this is I was trying to solve an answer. I was selling properties. In the midst of selling them, they're not giving me any more rent. So it's kind of like you just quit your job, but you keep living. Like, the bills keep coming. You got to pay for things. And that started occurring to me, like, well, why not? I'm already borrowing. Why wouldn't I borrow to do the same thing? Kind of in the market. And that takes
it's almost a no-brainer.
Yeah, and it had never occurred to me that the 30,000 I have in my day trading account sitting there, I could take it and buy 90,000 of something that pays a dividend, and I'd get 3 times. I'm going to pay the interest on it, and then I can still day trade during the day. You can day trade 4 times your balance. Never occurred to me.
Yeah, and you're getting paid to day trade if your dividends
exceed, right?
Since you're making money with the dividends,
right? And then once it took you a second to get that, right?
Yeah. And then the money you make day trading, you get like $3 for every dollar with the margin.
Right. So I think one time guys, well, I only made $40. No, you didn't, bro. You made $120 because that 40 will buy 120 of, like, the funds we're talking about. And so as I began to think on that, I realized, hey, in COVID, I had funds go to zero, but none of these funds did. Let me pull up one.
Yeah, I'm sure you wouldn't have gotten back in the ones that went to zero, right?
But here's the thing though. Let me pull this up. So this is in mine. Okay. So this right here, CLM, this is a closed-end fund. This thing has been around. I want to say it's been around since the 80s. Let me pull this up. Dude, it was up a whole % today. Let's see. Cornerstone Strategic Value Fund is a diversified closed-end. You need to understand what that is. Closed-end funds can trade at a premium to their value, or they can trade at a discount to their value. Closed-end management investment company. It was incorporated in Maryland on May 1st, 1987. So this thing's been trading since 1987. That's awesome, right?
Yeah.
So the current yield right now, even at this 8.79, we were buying at what, 6 something?
Yeah. 6, 7?
6, yeah. the yield is 16, basically 17%. It pays monthly. So boom, monthly income in something that's been trading since 1987. Now, I'm pretty sure there's been some market troubles between 1987 and today, right?
Yes, definitely.
Right. And so if you go to Morningstar and you can go look that out, look it up. It's a 4-star. I think it was a 5-star. It kind of goes back and forth fund. And the yield being that high. And if you go look, you can look at all the shit the fund owns. And they use some leverage. You know, you can go and look. Let's look at the net asset value.
We can't see your screen.
Oh, hold on. Let's pull it back. So let me back up here. All right. So I'm on the website. I don't own this. E-Trade doesn't own this. This fund is Cornerstone Strategic Value Fund. They have a couple funds. You're in 2 of them, right, Jess?
Yeah, I'm in CRF and CLM.
Okay. And then one is kind of modeled toward the S&P, and the other is toward the Qs.
Yeah.
And I think we kind of saw that here recently when the Qs kind of pulled back and the dividend, more dividend stocks kind of went up. But let's see. All right. So net asset value. Cornerstone's net asset value, $7.19. Now, put it in over here for the. So the net asset value, I think this confuses people sometimes. This is a term I've only ever seen used by closed-end funds. So this is something unique to the fund because remember we said if more people buy the shares, they don't buy more shit necessarily, right? The shares go up and down like a stock. The net asset, the NAV of a closed-end fund is the total value of its assets minus its liabilities divided by the number of outstanding shares. So all the shit that it owns minus its debt, because these guys borrow money to invest as well. That's how they get such a high dividend,
Mm-hmm.
And then we're doing the same thing. So one of our dollars will buy 3 of CLM. Now think about that. It's a 17% yield. And one of our dollars buys 3. Now we might not want to buy that much, but we can. We could actually buy a little more than 3. But I typically, and we'll get into the ratio of this, but this fund here is what we call an anchoring fund. So when I was describing shelves, this fund would go on there. This fund has been around since 1987. And you can come in here and you can look at all the shit they own. They own a bunch of shit, man. Have you ever looked at all the stuff they own?
Yeah, I've looked a couple times.
Some of it, I'm like, how in the hell are they getting? I mean, some of this is crazy. Like, these are all, they are invested in funds as well. I mean,
yeah, it's a fund of funds.
Yeah, but it's massive. Like I used to own this Gabriel Dividend Income Trust, and it was like 8% of my whole portfolio. For them, it's just one that is 1.66%. And so the fund has, I don't know, what is it, 6 billion or something? Let me see. 2.1 billion. And so they have that money and then they leverage it. And that's how they're trying to get this. If they can't earn this percentage, and you'll get a tax form. People are always worried about taxes. You'll get a form and it'll say ROC. And if you do your own taxes on TurboTax, you follow the fucking instructions, it'll put it in. But return of ROC is your own money back. Like they didn't earn 17%. Maybe they earned like 15. So that, but because they're declaring 12 equal payments, that's the one thing they do because a lot of retirees own these funds. And you really kind of need a stable income. So that's one of the things that make people attracted to it. It's one reason it'll trade at a premium to its assets because it's only got $7.11 it said. But if you look at the price of the fund, let's see. If you look at the price of the fund, $8.79. That's crazy, man. It's the highest premium I've ever seen since I've been, following it. I've never seen utility stocks this valuable. But I said that over here, and I said that here, and I said that here. So I don't know, right?
Yeah.
I mean, it's going up. I don't know what to say. But guess what? How does it pay its dividend?
Monthly? What do you mean
Yeah,
now?
it pays at the NAV.
Oh yeah, it trips at the net asset value. Doesn't pay at the share price.
And the NAV is $7.11.
So
think
yeah,
that's-
you're getting free money. You're getting more than the 10 cents.
Right. So think about this. I mean, this is amazing. So the price is, so if you got 1,000 shares, the price is $8.79. That'd be $8,079. They're going to pay you the dividend down here. Let's see what was it? I haven't looked at their thing in a minute. 719. Man, right here. What if you could go back in time and buy shares there? Would you buy 5 shares?
Yeah, we probably did.
I know, but
We
I'm
probably
saying
did.
you probably, yeah. But knowing what we know now, it's always easy to look back and go, oh, I should have bought a shit ton, right?
Yeah.
But we actually thought it was the high over here. I mean, because look at the RSI. So the point I'm trying to make is, I mentioned earlier that you could use your trading skills to make more money with your business, but you can use your trading skills to make less money with your business. Meaning you can get too fancy and put like call in tops and bottoms. I don't know. I mean, what do you think? You think it's worth trying to move in and out of these? You can kind of do that in other accounts, right? I mean, are you trying to move in?
I've never thought about moving in and out of them. No,
Right.
I mean, I wouldn't.
Right. And we'll talk about ones we would, but I have not done that with CLM or CRF. And you can look it up how they calculate the NAV. But here's the thing, this only does this at E-Trade. So let me back this up. And man, this is amazing too. I mean, watch this. So what's the date? So 1029 was the last time. No, we get paid 1029? Yeah, we did, right?
Mm-hmm.
All right. It paid, it says $8.25. Seems high.
No.
Where was our online? Did the NAV go down?
I think you were looking at CRF. And now you're looking at CLM.
No, this CLM.
Yeah. But you were saying that for the net asset value, I think you were looking at CRF.
Oh, was I? Oh. I was.
See?
God. Yeah, my bad. Well, here it is. No, this is CLM. Oh. Somehow I clicked the wrong thing, but CLM, it shows 719 now. I wonder if, did it change? I mean, that was still much lower than the stock was trading for. Let's see. Oh, dude, I bought those. My bad.
Yeah, I was gonna say that's a pretty.
I bought those. Yeah. Let me take these down. Let me find. I have so many goddamn transactions. Let's see. You have another monitor for your. I mean, you don't have to show it on the screen, but do you?
Yeah, I have my phone and my iPad here.
I was gonna see if yours are the same. Let's see. God damn, this is me. I've been buying the shit out of this. I'm trying to find my dividends here.
Yeah, I'm gonna log in and see now.
Oh, here we go. 10-3. Jeez. So 10-3. So it was October, right? 60 shares. This was a dividend. It bought them at $7.13. 10-3.
So bought you 60 more shares.
Yeah. Let's see. Now, what did we pay for those? Let's see. We didn't pay anything, right?
For the dividend?
Yeah.
No.
I didn't pay anything for it. So here's October 3. So watch this. So 3rd October. So 10-3. The price was $7.54. And the dividend, and it paid at $7.13. So
Yeah, mine paid at $7.13.
so my dividend has increased by $100 on top of the dividend. So the dividend itself has gone up 23% because it was already below it. So
And then you said that previously the NAV was $7.11.
Yep, that's what it is right now.
Yeah, so my dividend drip on November 5th,
Mhm.
it dripped at 7.11.
There you go. So now it's at 7.19. So the next one coming up, I mean, it's at 8. I mean, it's ripping higher, dude. Look at this. I mean, so it's going to be $1 something per share. Just free money, just like
Yeah,
that. On top of the dividend.
CLM and CRF are my top performers.
Yeah. So when the dividend pays, guys, they're buying you the shares down here. And then as soon as it opens, they're going to open up here. On top of the shares. On top of you're only paying how much of your money for a share? $1 buys 3, right?
Yeah.
Okay, and it pays you 17%, pays monthly, a little over 1% per month, and it's paying you at buying you shares at a discount. I mean, it's the greatest thing ever. I mean, yeah. I mean, obviously, looking back now, you're like, why in the fuck you should just put everything in there? But that's not the way to think about this. Now, people are going to get caught up on, well, how much is your interest? It's whatever they charge you, man. You can make it
Yeah, your
work.
dividends are going to be way more than the interest.
Right. When you get a lot of money in there, they will work with you. You get $250,000 in there, they're going to take it down as low as they can to keep you. And one of the things that we do, and so that fund that I was showing you right here, guys, this is, and I'm going to show you if you look on, hold on. This fund, CLM, the one we just, I mean, it literally prints money. It's crazy. So in my account here, this is my total. So my debt is $196,000. That's a lot, huh?
Yeah.
People freak out. Oh my God.
That's your margin debit?
Yeah. Now, a chunk of this is a short position, right? I got that, or bonds. And there's a little bit of it that are some swing trades that if I took them down, they're dollar for dollar, and we'll talk about that.
You're borrowing more money than you have in there?
Yeah.
Oh, wow.
Right.
Okay.
Because now mine is running really, really high. That's what I was going to point out. I have trading skills. I would not tell anyone to do this if they weren't very confident in. I mean, I published a thing called the Peters Report, right?
Mm-hmm.
All I do is this. So, I can run it tighter. I think mine was at 60 something percent, but I can click the button here and this will go up by 40 grand,
Mm-hmm.
So just keep that in mind. And for every dollar, remember we were talking about this, we'll buy 3. You could day trade on 4, but buys 3. If I can make $300 on a trade, that'll buy $900 of CLM.
On a swing trade, not day trading.
Right, on a swing trade. Now, I'm a day trader too. So the point is all of that could be done in this account, but don't do that shit in this account until you know how to do that stuff. So if I click estimated income, it's 92,000 a year. And you can go through and look at it. They're all different sizes based on, like, here's CLM, right? So the dividend is $543. And then CRF's 419. That's $1,000 right there, right?
Yeah.
And then, C and then golf. There's all these.
But then but it's gonna be more, right? Because it drips at the nav.
Yeah. That's the thing, right? And then it's going to go up. Now, each of those dollars give you the right to buy $3 more. Now, what I could do is let that money hit, and then my available for withdrawal goes up, right?
Mm-hmm.
And so in this business, because I really don't see this as investing. And I've had people say, well, I had a guy say he was going to put his life savings in there. And I was like, bro, don't be a dumbass. We're not doing that. Put new money in new things. So when you started, what'd you start with? $1,000, $2,000?
Yeah, the $2,000, because you need at least $2,000 to use margin.
To use margin. Same on M1 financing. We can talk about
Yeah,
M1
so you
finance.
you need at least $2,000.
You need at least $2,000. And if you have less than that, whatever, just start building it. And one advantage to actually having less money is you now have time to learn. Like if you don't have the money to day trade, that doesn't mean you can't day trade, right? You only need money to make money day trading. But if you paper trade, right? You did for a long.
You just paper trade.
Right. And so you learn and you practice and you take this as a business. I don't know what people in here make, right?
Yeah, so the whole point is you're trying to replace your salary or income with the dividends, or not even replace it, like double it or triple it, whatever they want.
Yeah.
Yeah, it's not necessarily just replace.
Well, what if I made 50 grand a year, which I know a lot of people that make 50 grand a year, right? I mean, that's more than 50, right?
Yeah, so you're making more than someone's salary with your margin account.
Right. And you can let the difference add to your account, which will over time build up your cushion. And you don't have to be like me. You could have this a lot more available, because what we're going to talk about in real estate, there's only 4 numbers. How much are you going to pay the bank? What is your insurance? What are your taxes? And what is your maintenance to keep the house afloat? That's it. There's 4 numbers. And then you collect rent, right? And you take the rent and you pay these 4, and what's left is called cash flow. That is real estate. It is that fucking simple. And someone said, did we freeze? He says, does E-Trade automatically buy at the NAB when you drip? Yes. And as far as I know, E-Trade is the only exchange that does it. I've heard there's others. I don't know if Schwab
does it too, but you have to call, and apparently some of the people aren't that educated when you call. So some people will enable it for you, and then some people say they don't drip at the NAV.
They don't even know what that means.
Yeah, but I've also heard people in the Discord say that there's drips at the NAV. So you got to call on Schwab on E-Trade. It automatically does it.
Just think yesterday when you're visiting family and friends and you ask the room, hey, does your brokerage drip at the NAV? Does anyone answer you? Or does everyone go, what the fuck are you talking about? You know anybody that would be common language for them?
No, definitely not.
Yeah, okay, they say Fidelity does. Now, listen to what I just said. Here's what's crazy. So I have this is not a lot of money, by the way. 13,000 of this is not mine, right? That's just gained. And the reason it's like that, we have money flow members because based on when they got on the train, this is the big difference. If you got on the train right before the COVID crash, right? If you didn't get on until that happened, you're like, oh, I should do this stock thing. This guy's been in longer than you, but you have a bigger return, right? I mean, and then when it comes down, he may be scared to even invest. You're just putting shit in. You never know nothing but up.
Yeah.
And then they're kind of passing each other, man. So you just got to know that I think I tell people to get in flow with the money flow takes about 2 years. And they say it's Schwab told me they don't drip at the NAV. I'll call again tomorrow. I would move that
Yeah,
shit.
that's
Dude.
what I'm saying. Some people say that they don't, but then some people said that they do. Like I know they do, but when you
I would
call,
move
some
it.
of the people act like they don't.
Yeah, because they're dumb. They're not doing this.
Yeah, they're not professional. So like when you call, you should ask to speak to like a professional investment
Like,
advisor. Like
yeah,
basically
E-Trade, they
someone that
call
knows
it
what
a
they're
trade desk.
doing.
If E-Trade, if you have over 100 grand, you get to talk to a trading specialist. I mean, some people don't even understand the drip concept, which is technically an old concept, you know. So if we take this per year, let's take this down to 1 month.
Yeah, so I didn't I got E-Trade for this account. Like it's
Right.
simple.
You're going to need more than one account. I mean, that's just life. I have 7 accounts and they all do something different. And that takes time, guys. So this is not this I wanted because I was going to sell properties and I wanted income so I could continue on. And what I began, I mean, and so I started with my day trade account and I put it to work, man. Now here's the crazy thing. I'm all in, right?
Mm-hmm.
I've borrowed money, almost 200 grand. And look, I can still pull out 15 grand. How is that possible? It's crazy. During the day, they give me what, 51,000 to trade? I mean,
Yeah.
so if you're a good trader, you can make money there, right? So if you think about this, and trading is not investing. I think we all know that, right? Trading is not investing. Trading is trading. It's like flipping shoes, you know, flipping houses. He says, I have a Robinhood. Should I switch my brokers to E-Trade? If your plan is to be professional at this and make a lot of money and run a business, I mean, if you said to a guy that,
Robinhood doesn't drip at the NAV, so if you want those funds, I wouldn't go to Robinhood.
and we anchor, where this is a good time to talk about anchoring. Most of my money is anchored. If you look, okay, I have 153 in the game. If you look at the positions, CLM is 28% of my portfolio.
We can't
And
see
then,
your screen.
oh shit, hold on. Sorry. There we go. CLM is I have $43,000 in CLM.
Like if you're already in Robinhood, you can keep that account there. Just open
Yeah.
a new account in E-Trade for this purpose. Don't
Right.
like transfer all your accounts.
There's a reason to have a Robinhood, and I'm going to show you why when I go to M1, because each thing treats margin different. In M1, you don't have to use margin on a transaction. I don't know about Robinhood. In E-Trade, if you have a margin account, every fucking transaction is margin, right?
Mm-hmm.
Everything you do. So if you come over here and you click margin, this is going to tell you how much of your money is required to hold it. So if we go down here to CLM, remember how much was I holding? 40 what?
43,000.
Yeah. How much of my money's in it?
13,185. So you're getting the dividend drip on 43,000.
Right. Huh? Or don't. I mean, so that requirement is 30%. They can change this, right?
Yeah.
So part of your business, because we're not trading, I need to scan this every day because they changes. When they make changes, this number here changes. So if they took that and raised it from 30 to 50, this here would go down. This would go down. You'll see the total margin requirement.
Mm-hmm.
Right. And this is my total, this is my part, and this is excess. So the numbers that I'm watching all the time is my account balance. And the way to know if I have too much borrowed is I want this available to withdraw to be 30% or higher. If you're more conservative, this should be about half of this. That'd be pretty conservative, huh?
Yeah, your available to withdraw should be at least 30% of your net account value.
Right. Mine is out of whack, obviously.
Yeah, yeah.
Part of the reason is I have a very large position that should go the other way if the market comes down. That's why. If it doesn't, I'll click it and roll out of it. So if you look at this, DIPS, we talked about that. DIPS is one of these yield max funds. It goes down when NVIDIA goes up, right?
Yeah, it's an inverse fund for NVIDIA.
Inverse fund for NVIDIA. Try to get your mind around that. I have 100 shares that costs $1,377. It's 100% maintenance. That means all my money is in it. If I was to sell this 1,377 would now buy, what would that be? Like 5,000?
Yeah.
So I could cut this and I could buy $5,000 of something else. And so as we go down this list, you see here, look at Misty. Come on, man. 100%. That's rough, huh?
Yeah.
Well, look at the size of my position.
It's small.
$6,222. But that margin that's all my money.
Yeah, so if you sell it, you'll get $6,000. And then if you buy CLM, it would give you 18 grand.
Right. So the point is, if the market turned in my store, so to speak, I can unload inventory that would raise this, but it wouldn't change my estimated income by very much. It might a little bit, right? I mean, it would.
Well, Misty would, yeah.
On Misty, it would be a chunk, right?
Yeah.
Although, if you took it and then you bought something that was, a decent size that was a 30% margin, you could make up half of it or more. But that will be a hit, and so you got to kind of factor that in. So that leads into that when you go to estimated income, shit, this number floats, huh?
Mm-hmm. Yeah, but it changes.
And you'll see it like on Friday it was 94. And then shit settled and closed and it readjusted. Now it's 92. And typically when it would break into like the 80s, it would do that. And then it'd be at 85 to 86, it would kind of just work its way up. So it has a float of a few grand. And then I took Coney out and that was the big hit, man. And so I had to look in my store. If you take something out because it's not selling or there's some reason, right? And the reason is I was trying to protect. I wanted more margin, I wanted more money in here to protect me if we had a pullback. And that's just, that's just risk. But we're paying interest on that money that I have borrowed. That's a real thing. Interest.
Yeah, it automatically comes out of your available to withdraw, right?
Right. Automatically comes out. And I mean, if you're trading, like, would you make a little over $100 on Ford the other day?
Yeah.
Right. And so
my interest payment's like about 240.
Was it?
Yeah.
I don't even look anymore. I mean, I just trade, make money, collect dividends. And
I
really don't care. And I see people like they're analyzing it. And it's like, bro, make money. Don't worry about it. Like if you put as much time in making money and getting down the money flow and executing trades correctly, you won't give a fuck what it is, because if you can do one swing trade, make $900 and your interest payment's $400, who cares? Now all those dividends you're collecting, right? So he said, would 10K be good to start grow it? I don't know, man. Whatever you want to do. I mean, 10 would buy him 30, or at least buy him 10.
Yeah, you only need 2,000 to start a margin account to start borrowing. So
let's use his 10 and let's look at my account for a second. Using mine as an example, which we are using mine and Justice as an example. I'll put that link in there because we've got a letter to help kind of because this is a lot of layers, man. What we're doing here. You can see my screen, right?
Yeah.
So he has 10 grand. If his 10 grand is me, he would have, so 28% of it would be in CLM. So that'd be what, $2,800?
Yeah, roughly.
Yeah. And then he would have 2,300 in CRF. And we'll talk about why Uber's in here. That ordinarily would not be in there. I moved that, and maybe we should explain that real quick. You can, have you ever done this, Jess? Transfer stocks from one account to a different account, and it's a different broker?
Yeah.
Are you saying you
You
could
can
move
transfer
stocks?
positions, yeah.
You could move them from Robinhood to E-Trade?
Yeah, without selling them. You just transfer the positions.
Right. You know how many people I've met that sell it, transfer to their checking account? And I'm like,
Well, I mean, if you're just starting, like, no one knows that. Like, yeah.
right.
I mean, I know now.
Right. It's like, bro, you just pay taxes, maybe. Like, why would you do that? Like, they don't know that you can just transfer them
Yeah,
to
you
another
can.
account. Yeah.
It's
So
really
you open,
easy.
yeah, you open up the account. I have 7 different accounts. Here's Jonathan said, I heard you can actually call and negotiate down the interest rate with E-Trade. Blows my mind that people will do that and not do a one-on-one with me on how to make fucking money trading. And don't worry about your interest rate. Like, they'll call E-Trade and spend an hour on the phone negotiating 2% lower, and they still are not good traders. You know what I'm saying? Like,
Yeah.
spend your time where it's important. Okay, so like this guy, he's got $10,000. Is there a big fucking difference between 8%, 10%, or even 11%? It's just, it doesn't matter.
Yeah.
Now, as you get bigger and bigger money, those percentages can mean a lot. They can be thousands of dollars. Even then, bro, I don't care. Like, I mean, I was buying houses at 9%. I bought them at 4%. What can I rent them for? And so if I think I can trade, I just, I trade. You ever made money trading?
Yeah.
Yeah. But your cash account, what are you up? That's not margin, but what's your cash account up?
Like 110%.
That's really good. That's beating me. I'm not going to tell you mine. But I talked to 3 or 4 people this week in the MFG, and I don't know. I mean, maybe it's that way everywhere. I don't know, but that are 80, 90, I didn't hear any over 100. I'm sure. I think Lisa said she was like at 100 and something.
Yeah, she probably has some MicroStrategy.
Yeah. She's Bitcoin heavy too.
Yeah.
She was buying a lot of Bitcoin when everybody in here was scared. What dictates the percent change? And we'll get into that, man. As you look at this, so it's really simple.
Well, E-Trade determines it by the market conditions.
Oh, he's talking about the margin. Yeah, that is exactly right. E-Trade will change it. And whenever they change it, man, something's coming. So let's look at yeah, so you can see that at any time. You can click. Oh, but here's also, let's say you want to buy something. Hershey, right? That's a swing trade we're doing. Could you buy a swing trade in here?
Yeah.
Right. But you need to limit those. And that needs to be taken into account when you're looking at this, right?
Mm-hmm.
I think I got onto you one time last week because that was getting too low, but you had a lot of swing trades going.
Yeah.
And which is fine if you know what you're doing and you're willing to cut them. If you can't take a loss on a stock, do not take trades in here. Just keep this balance nice and cushy because you will blow out. You got to be able to take a hit. 30% for Hershey's. So let's see how much of my money is in Hershey's. Let's see. Oh, there it is. I only have 35 shares. My money is, I have $1,835. And it's 6,118. But that's 1%, right, of my portfolio?
Mm-hmm.
1%.
So it's small
Mhm.
position size.
Tiny. Let's see the portfolio, though. Am I in the green on that? I was in the red for a minute.
Scroll up.
Did I pass it? Let me see.
Yeah.
No, I'm down still. So I'm down $104. That's only 1.1. That's only 1.6% though. So let's see. But that money I'm down it's actually more than 1%, right? Because I have 1,800 in it. So it's much bigger than that. But look where we're buying it. Now, have you ever seen this before, that pattern?
Yeah, below the 200.
Yeah. If you trade, we're traders, right? We have a strategy inside the money flow called the B&B, bread and butter. So we look for high quality dividend stocks that fall below the 200. And we would like that, but their true value is higher than that. Wouldn't you say, Jess?
Yeah.
And so now what we're watching for is an anchor point, the lowest low. Right there, I thought it was going to be in play, and I actually bought some. That's why I'm down a little. And then it dropped. But on B&B trades, I don't usually use a stop. I mean, I don't guess I ever do, because I just wait for the next stage one, because I really believe, and it's almost never wrong, this stock will get pulled back. Unless there's something fun, unless there's something actually wrong with this company. But if you go look, there's a whole bunch of these, right? In stage ones.
Yeah.
Right. And what makes this one attractive is it's below the 200. So that's another strategy inside of my business here, where I can use margin and I can buy a quality. We're not buying, crazy things. We're buying quality. It pays a dividend and it's below value, significantly below value, below the 200-day moving average. And I can use money. I only need to make, what is it? 35 shares. Is that what we said?
Yeah.
All right. So what was my price point? Hold on. Hershey's.
Scroll, yeah.
35. So my price point's 177. To 177 to 188. What is that? $11?
Yep.
So
Times 35.
$11. Yeah. What? You think I could do that in my head, dude? 385. Now, it pays a dividend. That's why it works. You can only do this strategy if it pays a dividend, right?
Mm-hmm.
And we're working on a thing on that. And the dividend, ex-dividend day was 11.18. So we qualified for it. The dividend was 11.8 right here. Actually on the lowest low. See, that's why it probably dropped down out of the box. That was ex-dividend day.
Mm-hmm.
And it immediately came right back into the box. That's crazy bullish right there. So if you're watching that, and remember we got in up here, right?
Mm-hmm.
Yeah, this is just using trading skills on this. So we're going to get this dividend, which would be $35. Now it could be 100 shares too. It doesn't have to be 35. So 35 times 1.37. That'd be $47. Plus, what was the other one?
That's a
What?
350? 35 times 11? Like 380?
Yeah. So now, yeah, we're at 397, right? But I only had $1,800 in it. So it's not bad, huh?
No, that's great.
Yeah, it's a 22% return instead of what would be whatever return, because we qualified for the dividend. Now we're moving it. It's tempting to break out, assuming that it goes up and hits that, right? So that's me analyzing it and taking trades within this. Now he said, what about WBA? Man, I said high quality companies. Now you're fucking trading. Now they're trading. but we don't want to put junk in here. I would not put it in a margin account. I would not put the worst stock in the fucking Dow Jones in a margin account. Would you?
No, I
I
don't
mean,
have it in mind.
I mean, you could if you're gonna buy if it's small and you know what's up, but I'm not writing that shit down. So I mean, I wouldn't. Is why not buy quality things? You don't have to buy shit. Like we don't because it's 3 times. This is what I was trying to say. So you may look at that and go, "Oh, you just made $397, big deal." But that buys 3 times CLM, right?
Mm-hmm.
Which pays a monthly dividend. So this shit grows exponentially. This is what you know. I mean, this is what you need to understand. Almost every day, if you go in our Discord, people are like, every week, your dividends, they're growing fucking
Yeah, like
higher.
so many people have like 4-digit dividends now.
There's people posting 20-something thousand ones. I mean, it's crazy. Now, some of that is because of yield max. And I think it's important to understand, and we're going to talk about the tiering. And if you look on there, and I'll send this in a PDF. I'm going to send it up following back. We start our business. I want to put the safest shit, the easiest things to sell. Candy bars by the fucking register. Just simple, everyday things. Milk, eggs, right? If I run a store, I want easy access to the easy shit. And that's kind of how I see CLM and CRF. It's just easy money. We can buy it on leverage, and it's just a no-brainer. Right?
Yeah.
And then the risk on that is it's been around since 1987, man. If anybody can fuck it up, maybe we can, but it has been here since 1987. So that's before you were born, right?
Yeah.
Right. So your parents could have been in that the whole time, just making money every month, making money, putting money in, buying more shares, and just everyone in America could be rich as fuck, and they're not. So let's start there. And so if you think, well, this is weird or unusual, no, you're weird, unusual. You should have brokerage accounts, and you need to understand them. So like my friend there said, he's new. Nobody cares, man. Like you got to pick up the pace. Like the world is not slowing down. Oh, he's new. Let me slow down. Nobody's doing that. The markets are going to go on. So we're adults. And it's one thing to try to teach it. You ever try to teach a 14-year-old boy math?
Yeah.
And he doesn't want to be there.
Yeah.
Versus even, I don't know, maybe, I had a son, so I don't know, maybe a 16-year-old teenage girl, and you're sitting in philosophy. She doesn't want to be there, But as an adult, when you're 40 and you go back to college, your learning is different.
You're choosing to be there.
Choosing to be there. So as an adult with money, you can choose to accelerate your learning. That's what you've done, hanging out with me, and come and spend, stay up all night, hang out, go to wherever I'm going, and just listen and learn. And you learn faster, right?
Yeah.
Yeah, there's people, they've been around me 2 years still trying to figure out the win. And it's like, bro, like if you actually learn this and you learn it fast, and you need courage, like during COVID, Vernon was with us during COVID. We lost most of our Discord, and it just went down, 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 down. We're buying every stage one. It is not going to zero. I know that. Without a doubt, 100%, it is not going to zero. So that allows me to aggressively keep buying stage ones. Well, guess what happens when it turns? I mean, you get wealthy, and then people are like, oh, you got lucky. It's like, no, I'm preparing. So I've told, I don't know how many people, this thing here is like, hey, man, if you come over here and you got $10,000, that guy says he's got 10, he's probably got 30.
We can't see your screen.
Oh. But my man there said he had 10, he's probably got like 35. His girlfriend won't let him spend 10 of it unless it's on nails, purses, or trips. I mean, that is most people. They have more than they tell you, which is fine. And you don't, I wouldn't jump in and go all in on anything, but I would be a person that can test everything, like the idea that everyone here doesn't own Bitcoin. I mean, I hope they do. If you don't, you couldn't click buttons. Like you don't have to go all in on it, right? You could buy a little bit. Yeah. So $10,000, I think, would be great in this strategy. That's a great thing to start your business with. But look at this, man. imagine this. Just let your brain dream for a second. There are people who will go in to this. You can see my screen, right?
No, we can't.
Hold on. There are people, and they will go into the Small Business Association and they will borrow $391,000 to start a restaurant. I cannot think of a more horrible thing to do. How many days do you think you're going to work?
Every day.
Every day. And if someone calls in sick, guess who goes in? You. Right?
Yeah.
Yeah. And they're saying 458 today. Okay. And then I went to the same Google and I said, according to tax returns, what does the average small business owner make? He said in America, it's between 70 and 100 grand. Now they're probably hiding a little money. In Texas, it's 119. Now, it doesn't say they borrowed money, right? But I'm just looking at generalities. So if you did, the average loan is like 458. 458, you're going to pay 3% over prime. So whatever the Fed has the rate at, you're going to pay that plus 3%. So if they lower the rates to 3%, you're going to pay 6%. That's lower than a brokerage account. There are people who will go in and borrow that to start a roller rink or a comic book store. Seriously. Okay. What do you think the chances of that making it are? Or a retail shop where you sell clothes. You got insurance. You got to deal with being robbed. Think of all the shit you got to deal with. Or you just put it in here,
Mm-hmm.
And you're being very generous with this, like you're avoiding it, and you start filling inventory. So instead of buying food or whatever, you put half the money immediately in the safest of things, And then I moved Uber over. We were talking about that earlier. I moved this over from a different account because I didn't want to sell it. I didn't want to pay taxes. Right? I got 11 grand sitting there. So instead of selling it, I brought it over, and it gave me like $60,000 in margin. Now think about that. I'm not selling Uber. I'm gonna ride it to zero. Matter of fact, I'm buying more Uber if it goes under $60. But it didn't quite hit there, right? It ran up. I was waiting for it to go to 200. That's how you get wealthy. Like you buy a lot of good things, man. So that I don't want to sell Uber. I only want to accumulate. And I believe in the company because I've researched the company and I use it, blah, blah, blah. So that asset that I've accumulated and its gains, I moved it over there, gave me access to $60,000. Now we start talking about yield max, right?
Mm-hmm.
And defiance. And so in this business of yours, you've got to get most of your money right here in the safest of things. They call that anchoring. We anchor the portfolio. We're personally doing it with CLM and CRF, right? Because they drip it in that. That's the main reason, because these are like magic funds. And they only take 30% margin. And I don't know if you've noticed this, but they go up. They've been going up. So there's nothing to not like about these. And if you were to say, well, I think it's the top, I said the same thing $2 ago. So I don't know what to say about that. Uber, I'm not going to sell it. So this gives me a way to use Uber without paying taxes to make more money. I don't know if everybody just got that or not. If you go down to what is the number, we call this a tier system. These funds are by defiance. You own these, Jess?
Yeah, we can't see your screen.
Oh shit, we're not on. I can't see my screen. Hey, Calvin, we're not talking about trading, bro. Come on, man. Do you have Calvin? Do you have $75,000 in CLM and CRM? That's what we're talking.
Yeah, he's asking about ADMY.
Yeah, we're not talking trading, man. But you could do that in here. But the only reason to do that would be what? To buy more of your anchors. That's why you're trading, is to offset.
He's asking about the yield max AMDY.
Okay, let's see.
I
own it right here. 200
you-
shares.
Yeah, I have it in my account too.
All right, so 200 shares. Let's check the margin. What is it, 50%?
I believe so. That one was 100, then they changed it.
So they lowered it. We want to, how would you know that though?
You have to look in the
Are
margin
you,
tab.
are you saying you have to do work to get this 92,000? Yeah, that's the business part. Meaning I collect $92,000. I don't know how much you make it work, but that's not me working. That's just this account. I have 5 others. So if the more energy and time you put into it, the more you make. So I have $1,162 in it. And it's worth what, 2,300 and something.
Yeah, because it's 50%.
Right. So $1 buys 2. All right. So if we know that $1 buys 2, where's it? Oh, damn. Oh, sorry. I'm down $447. What's the dividend yield, man? 97%. So the last one was what, $81?
81 cents a share.
81. Yeah, so that'd be $160 on 200 shares. And it already paid, right? It paid on the 15th.
Mm-hmm.
Right. Now I don't have these set to drip. Originally E-Trade didn't do it. So if you have my course Getting Started with Stock Charts, you should be familiar with how to set these up. If you're not, bro, you need to get that fixed, man. Like, this is not that complicated. Do you have a folder for Yield Max?
Yeah. I
What do
have an extreme yield fund folder.
What do you call it? You call it that?
The folder? Yeah,
Yep.
extreme yield funds.
Let's
I
see.
have like all of
Thomas
them in
Simmons
there.
says, are you still pushing money into CLM and CRF since it's trading at a high premium, or do you push it in other closed-end funds that are stage 1? Yeah, I've been pushing it in. Yeah, I don't mind buying it, Thomas, because the dividends buying
It
us
drips at
shares.
the NAV.
Yeah, it's what, $7.14.
Or you're just like you could add on the pullbacks. But if you don't have any now, you got to get started.
You got to get started. That's what I'm saying. People overthink this. They'll spend so much time on that and interest rate. And it's just, bro, buy it. Let's go. And that way you can start getting money, because you can take that money and you can put that into stage 1s, you know?
Yeah.
I mean, it was high. Remember my buddy, and I was like, I don't know what to say, bro. It's on a 74 RSI. It was $6.50.
Yeah.
And I'm like, the RSI is too high. It looks like a market top. Now it's $8.70. So it looks high right now, Thomas, but it could go to $9. Then is it high?
You go to $10, right?
Right. It could just keep going. I mean, that's the problem. And looking at it right now, you think it's the high because of the way we've all been trained to be as traders. And I would encourage you not to over trade this, because if you over trade it, then you're not going to get into Misty. You know, you're not going to get into some of the ones that are paying the biggest money, because as a trader, you wouldn't buy that. You're not thinking buy income because you're not running a business.
Yeah, this isn't precision. Yeah, this isn't, you don't have to be that precise.
Yeah, we're not trading. We're running a business. And I'm in the business of putting shit on the shelf that pays me money. Right now, I want to look at values, but who calls the top, man? I don't know. Is it the, I don't know. But I do like AMD though. Let's see. So don't trade your way out of this. That's what I'm trying to say. So many people miss the joys of this because they're so caught up in being traders. This is not trading. You can use your trading skills, but yeah, I would definitely like to buy more of this, right?
Yeah.
I mean, but we want to check the underlying stock. I mean, here's the problem with Yield Max. Yield Max have single stock risk. If there's a problem with this, it's going down. So if you're trying to do what I'm talking about here, let me So let me show. My yield max positions are small. I mean, there's a lot of risk in yield max. The only one that's bigger is probably Tesla, and that's just because the dividends bought me a shit ton. At first I kept putting it back in,
And it's recently run up.
and it's recently run up, and that's 5%. And the only reason I've let Ulti be bigger than that is it's more than one stock. And that's the same with YMAX and YMAG. These are weekly payers, and they're not one stock. But any of the ones that are one stock, if you look, they're going to be pretty small. Snowy, 2%, and that thing has gone up 40%. So I wouldn't be comfortable having a lot of these yield maxes in there more than, you start getting more than 5%, man. I think you're really taking on some risk. And then, but tier 2 for me is Defiance. And
The
Defiance,
indexes.
yeah, the indexes, right? How do you sell CLF CRF when the rights offering is announced to buy it back at a lower price, or do you play the rights offering? Do you sell? You can. Boy, they just complicate everything. Everybody complicates everything. As soon as you hear the word rights offering, rights offering, yes, you can. If you give a fuck about the price of it,
Yeah, you don't have to do it.
No, I plan to own it the next 20 years. Do you think today matters? You think anybody's going to be remembered? Hey, man, you remember back in November 11th? Because if I ask somebody 5 years, because I've been trading 24 years. If you asked me 3 years ago, I don't remember today. So my point is, don't overthink it. But if they tell you, hey, tomorrow the shit's going to drop by, but you're going to pay tax on that. You're going to pay taxes. Do you want to pay taxes? What if you're up a ton? Why? I don't know. You need to. You're running a business. This is your store. And if I don't know. You got to think it through. Just selling it may not be the right move if you're going to pay taxes.
Someone's confused with the anchoring because they're like, anchor means buy at the bottom. It's in GP's book, but they're talking about an anchor point, and you're talking about anchoring funds.
Yeah, So you're talking about an anchor point. We're talking about anchoring a portfolio, man. And what I mean by that is when let me pull this on. Here's the portfolio. I have $153,000 in this example. And like Jess was saying, she's got 34,000. Well, if you come over here and look at CLM, it's 28% of my money, of the account. And then you look at CRF's 28%. Well, if you go through and you add, these are the ones from Defiance. So these are tier 2. But if you go through like REM, YYY, right?
Mm-hmm.
And they're not all perfectly balanced yet because the price isn't right for me to add a bunch of money to it yet. So when I first came in, I'm just buying CLM, CRF, and then I bought QQY, IWMY, and YMAX. Like you can only put so much money to work at first, right?
Yeah, GOF.
GOF was one. And, even if you buy a few shares, you go ahead and, you can pick them up. If you look on the bottom, these are let me pull this up. These are ones that I'm fixing to start buying. But look how much I have in them. $400. It's not even 0.32% of my account, right?
Right.
And
Dips,
yeah.
Dips is on the breakout.
Dips?
Yeah.
Is it really? These are weekly payers. And so what I'm doing is as I'm collecting dividends, I've been just building them up, just a little bit at a time. BCAT is one that I would like to add to, but it hasn't really been too cheap. We started buying PSEC. These are regular funds. These are not Defiance and not yield banks. And I plan to add to them over time. So these are,
PSEC is going for a breakout too.
And that was just a chance we took an opportunity. So one of the things that me and Jess do, we track all of these funds, and I'm constantly looking for closed-end funds that are valuable that I would like to add, like GUT when GUT got crashed, when so as these funds come open, So like right here, we were talking about that. AMD's a stage 1. Amazon's not set up yet. Here's the Aptly one. I mean, there's nothing to do there, huh?
Someone asked, Kelvin asked if we keep the yield funds on drip. If not, what makes you turn them off with the margin account? We just have the dividends go to cash so that when the cash hits, the margin increases. It's faster.
Right.
It's
I
a
don't
faster
drip.
way to build the account instead of dripping the dividends.
Right. I wouldn't drip into yield max. I wouldn't drip into Defiance. I would just wait for when they're good and on sale and put some money behind them.
And then Tim asked, how about holding rates like AG&C in the high yield margin account?
You can. We were just talking about that today, weren't we?
Yeah, I have it. I
Yeah.
just started it recently on the
I
schedule.
picked it up originally as a trade, and Jess she's going to keep it, and that's fine. You just got to know that you're taking on. So like RIM,
Well, it's only 3% of my portfolio, so it's not a big deal.
right. And so this is RIM, and RIM has 10 of the mortgage REITs. There's less risk in RIM than there is in owning one, but we have owned as a corp holding inside the Peters report. I mean, if you go to the Peters report, I've had it on that page for ever since I've been publishing this. So if you go to petersreport.com, come over here. Notice you're in there.
Yeah.
You're probably like, oh my God. Right here on page 13. I mean, it's been in there since I've been publishing this. And I've owned it for many, many years. That's different than buying it on margin though, I've also wrote it down to $6. So like she said, the way she protects herself on that is it's only 3% of your account, right?
Yeah. Where REM, it's safer, but it pays quarterly.
Yeah.
So I
REM's
have
probably
REM and M1.
right.
But
And I would have no
in
problems having AG&C there. And if you want to split the difference and be conservative, you could have half of your mortgage REIT exposure in REM and half in AG&C, because AG&C is going to get 3 or 4% more yield, and you're buying it on leverage. So it's even more, and then you could buy more than you want and trim it when it runs up. If you want to add trading skills to this, no, I would not drip in the margin account. The only thing I would drip is, I drip all of what I consider anchor funds, which are normal funds. I drip those. So if we're looking at my account, all of the yield max, I don't drip them. All of the Defiance, I don't drip them. Even though the Defiance are technically maybe less risky because they're based around an index and not a single stock. And so these are tier 2. Anything that's not a traditional fund that's leveraged in any kind of way. Like ECC, this is what I would consider an anchor fund. It's a regular closed-end fund, right?
Right. That drips at the NAV too.
Drips at the NAV. And the dividend's 18%. There was it had some stuff went down. I don't even remember what it was now, and it made it come down. So if we're adding, do I want to add the CLM? That's 16%. Hold on, where's or do I want to add to ECC that's 18%, trading way below the 200? I mean, that's just common sense to me. So if CLM pays me money this week, this is where I would put it. What about you? I mean, this would be one of the places.
Well, no, CLM, we drip at the NAV.
Oh, yeah. But I'm talking about, I meant yield max. So yield max and Defiance.
Oh, yeah. You would take that and put it in this.
Right. Now, here's one of the cool things. The Defiance stocks. So you can go to here. You need to do this too. It shocks me how many people don't do it. But if you go over to Defiance ETFs, what happens if you put your name and email where it says sign up to receive updates?
You'll start getting the emails.
Oh my God. You're making us work again. Right. So I'm telling you guys, if you take this serious, don't treat it like investing. You treat this like a business, and your business is to grow that fucking income. So you're looking at 3 numbers: your balance, your available withdrawal. You got to keep that. That's how you get a margin call. If that goes to 0, you have a problem. You have 3 days to start liquidating positions, or they're going to do it for you. It's not an immediate. You got a couple of days, but you don't want that to happen. The only reason that would be happening is maybe, like I'm day trading. I'll go over it. But at the end of the day, I'm gonna close it out, right?
Right.
The computer just tried to restart. So you can drip tier 1 funds if they drip in the NAV if there's a discount to price. You can drip tier 1. Yeah. You know, I drip all of the tier 1. So to me, a tier 1 is just a regular fund. REM, YYY,
GOF.
golf, just regular funds. I mean, I'm looking at adding GLV to this. It hasn't been in here.
Yeah,
but
now it's a stage 1.
yeah, I thought about it. And then,
Well,
somebody
I
asked
mean, I
me,
have USA.
yeah, USA, but somebody asked me about MPW. And I just think the stock's too volatile.
Nah, I mean, if it's like a smaller position,
I mean, yeah, maybe, right? You could buy 100 shares and turn it into $600. And I mean, it goes up, you make $200. But I mean, it's not like it's a big dividend. I mean, let's check what it even is. Does it even margin here?
and it pays quarterly, it's like, I don't.
Right. We're trying to get money fast, man. That's why we're day
Yeah,
trading.
weekly or monthly.
So
or daily.
60%. See that?
We can't see your screen.
Oh shit. So sorry. I pulled up MPW on E-Trade, 60%.
So
Oh.
I don't think it's worth it.
Yeah, 60 cents would buy $1. I'd rather own AG&C and get 14% dividend yield. Or ECC on a stage 1. What does ECC cost? Pays 18%. What is it? Oh, E-Trade will do it for 35. That's nice, huh? That means they think MPW is twice as risky. You know that, right?
Mm-hmm.
That's what that means. So when you guys look at this, and it's 60 cents of your money buys $1. But if you're buying ECC, E-Trade will let 35 cents buy it. I mean, that tells you right there that E-Trade likes this one better than this one. So part of your job is not to lose money. I mean, your job is to be a risk manager. So what I'm concerned about is my balance.
So yeah, if you look at REM, it's only 20% margin. Oh no, it's 30, sorry.
30. Yeah,
I
but
was
30
looking at
is
naked
the
options.
lowest.
Yeah, 30, and AGNC is 45.
I mean, who doesn't want to do naked options? Someone in Discord has risk examples. Well, Stephen Frill says there is no drip on Defiance. It wouldn't even matter. I would not drip Yield Max funds. I think you're going to do much better if you wait until they set up, and then you could trim ones that run and you could add the stage 1s, like Trim and Misty right now to add to AMD. If AMD gets on a nice run, that would have been a hell of a play.
Yeah, exactly. Rolling profits forward. That's if you don't really have any money.
Matthew Morris says, what is your personal comfort level with margin percent with these kind of funds? Well, I don't know how you guys come up with percent. I know if you go into the E-Trade app, if you go into the white, there's I don't know if you've looked at the black one is the one you want to use for trading. The white one is the one you want to use for just looking at shit. I don't like the app at all. I usually go to the website. But if I log in on here, I think it'll tell you exactly how much margin interest I'm using. Because when people say that, I don't know what they mean. Because that's not the way I calculate it. Let's see. Huh. It's in here somewhere. Now, if you go on their risk parameters, they're going to tell you this shit is highly risky. And they're right. I mean, this is more of we're not so he says percentage. There is a way to see it on that E-Trade thing. That's not what I'm looking at though, Stephen. What I'm looking at Skylar May says, if you have a margin account with Robinhood, can you transfer it to a margin account with E-Trade? Yes.
Yeah.
You just got to go have the accounts open. So go open one at E-Trade and then move it over there. Now, there are some to keep your Robinhood trade there. There are some things I hear at Robinhood that they give even better margin. Like I've heard some of the crypto stuff. Like I've heard Misty is 50% over there.
Yeah, like the yield max funds are less margin.
Okay.
They just have different things. Like they give you more margin, interest free. They have like deals where you can like randomly get like $2,000 in margin, no interest.
Right. So let me pull up. I'm going to show them on M1 one of the differences. Are you saying you might have to track multiple accounts?
Yeah.
Man, this is getting more like a business every day. Let's see. So this is our inventory. So yeah, you want to check, right? Let me pull it up now. You want to check. So yes, you're going to need to look at these things. Let's see.
Matthew said that the margin's way better on Robinhood. I mean, it might be, but the reason why we have E-Trade is for the drip at the NAV.
Yeah, but what does that mean? It's way better. What does
I
that
don't know.
mean? Right. We don't know what that means yet. Tell us what that means, bro. Where is it? Could have thought it showed. Where does it show on E-Trade? Or on M1 Finance, Bitto is marginable. Look at that. Look at this 45% dividend yield. See, I'm always looking at it on my phone.
Mm-hmm. What are you trying to find?
It's margin. I'm pretty sure it's 50%. Pretty sure it's 50%. And the point to that is, I'm almost positive it's 50%. But on E-Trade, if you go to margin and you put in Bitto, it's 100%. So it's not marginable at all. So if you're wanting to borrow money and buy this, obviously you would not want to do it. Yeah, see 100%?
Mm-hmm.
On M1 Finance. I know where it's at. Let's see. I know where it's at. Oh, Bitto's a fund, right? Yeah. Let's see. Oh, there it is. See where it says borrow against Bitto?
Mm-hmm.
50%. That means you can buy twice as much. And what's the dividend yield?
45%.
Right. And you pay 6.5% at M1. So you could be buying something that has a 45% dividend yield that's up over 100 and some percent this year, and you could borrow to buy it. That's what I did. So again, is that investing? Not really. It's not investing. That's not the kind of shit you do in a 401k. Nobody's borrowing against Bitto and running it up in their 401k. You're not going to go to Vanguard. Nobody's going to tell you about that. Nobody at your job's fucking human resources even knows what Bitto is. Right? These are things you got to find out on your own, man. No, and they don't support trading them. Right? Would you ever consider writing a book on step-by-step post-promotion? Similar to how they have money flow, step by step. Yeah, Mike, we're working on that, bro. Right. So we already covered that. And if you got it, you can go back and watch in the beginning where we talked about drip and why that it's so important on E-Trade. I would not own CLM or CRF on any other broker than E-Trade. I don't understand why you would, other than you're just fucking lazy. Like you're just too lazy to open an account. Because if you buy a lot of it, you could just own that in just that, and you could buy it at 30%, right?
Yeah.
I mean,
You have different accounts for different purposes.
Right. Well, but that would be like having a business. Not trading. They want to click buttons and get options. So, I would highly encourage you, don't look at this like trading, and don't trade yourself out of money. You don't know where the top is. You don't know where the bottom is. You want to look at it as risk management. So you want to take most of your money and you want to borrow a shit ton. That's what we're doing here. What we're doing. And yeah, we understand it's risky. You're not doing this again with 401k. You're not doing this with your life savings. No more than you would. Would you ever take your life savings and buy a food truck? I would, because I'd bet on me. I've been all in everything I've ever bought, right? I mean, I go broke. When I bought my beach, I was broke. I go broke all the time. But other people, you got to make that decision for yourself. I don't know if you can bet on you. I mean, I study the markets. I don't know if you do. I mean, that's a real thing, right?
Yeah.
Yeah, I mean, because when I first showed you market, you're like, yeah, right, I'm not doing that. And at the time, we were talking about 50 grand. I was like, bro, take that 50, put it in here, do what I'm doing. We'll turn it into 100, and then we're gonna make X amount, And everyone that I've done that thing with, go, no. Okay, well, I keep collecting money. I don't know what to say. Until I just want to show them what I'm doing. But no, E-Trade is the brokers I recommend, and also M1 Finance. And to show you the difference, we talked about in E-Trade, every transaction is margin. You can't opt out. You can't say, I don't want margin. You can't even ever get off the margin. The only way to get off margin on E-Trade is you have to sell the whole damn portfolio. You get that, right, Jess?
Yeah.
Yeah, you got to sell the whole damn thing.
Or at one, you don't need to use the margin to buy stocks. You can just take it out and use it for like an emergency or something.
Right. So let's see. Right now, it says your full buying power, 6.5% margin loan. I have access to 5,000 plus my cash. They're saying, Gerald, you have $8,312 you can use. Your account balance at least $2,000 to use margin, right?
Mm-hmm.
Well, I don't want to use any right now. I'm actually building that up for the coming correction, not crash, correction. Where's it at? Where does it say where you can borrow money? Oh, let's borrow. So here it is on Sky Dweller. Your margin loan balance. So right now, I have $8,119 borrowed. My rate is what, 6.5?
Mm-hmm.
That's pretty good, man. I paid more than that for some houses. The value of your investments would have to drop by 53% to face a margin call. Pretty deep, man. 53%.
Yeah.
The average correction is 20. All right.
You're good. So obviously it shows you're good. You're in the green. You're pretty
I
conservative.
could borrow more if I wanted to. So here's my interest. Where's it at? $44. That's just interest, right?
Mm-hmm.
So every month they automatically pay interest. Your loan doesn't change. You would have to directly pay on it to pay your loan. Well, they're going to take this out of your account, $44. So I have 8,000 borrowed, and it cost me $44. Man, what if you'd have put that 8,000 in Misty? Shit. It'd be 25 right now.
Yeah, I think Misty's 75% margin at M1.
Yeah, it probably isn't. Let's see. See if it'll show you here. So I borrowed money to buy it. $4,257,
Mm-hmm.
They have paid me $3,230 in dividends. But each month I pay $40. But I'm paying that on 8,000. So the other money, I know this is silly. What's this? So the other money I borrowed to buy, if you add these up right here, it was a little bit, yeah. So I actually bought the QQY, the WT, and bit in that, I bought more Bitos, what I did there. But so I have these on loan because these are the dividend of defiance of the U Pro and the TQ, right?
Mm-hmm.
S&P and NASDAQ. Now, everybody says the erosion will kill you, but M1 actually counts the dividend. So in QQY, I'm up 21%, and in WT, I'm up 12%. But now remember, I haven't owned these for a full year. So let me show you. Let's see. Where is it at? Activity. Holdings. So on your phone, you can't get access to the dividend income. So on that 8,000 borrowed, I'm collecting $547. It was more. Bito paid out more. So 540 something, right? That's dividends. And the interest is $41. So I want the spread. That spread is just money. If the money hits your account, you can actually buy more on margin, right?
Yeah. Instead of reinvesting it.
I went just right over people's heads. So the $41 a month buys me, it was $800. The dividends have come down between $500, $800 a month. That allows me to buy more than just $800 every month. Exponentially, could be 2 or 3 times that. What would you let that percentage go down to comfortably? Bro, whatever, man, whatever you can handle. Because you can get out of it. I mean, what is going to happen? If it goes, you can either put money in or you could close out some positions. Let's see.
Or are you saying though it has to be 30% from the net account value?
Right. So it said
it
showed you that count would have to drop by $16,000. 58% decline. That doesn't happen very often. I have cash. What if you bought the inverse?
Now you have a protection.
Right. Yeah. So, I mean, you can learn these things. You're not going to know all of that shit, though. And you don't need to know all that stuff. You can, build this out. YieldMax has stuff that runs inverse, like dips, crash. I'm still on the fence on those. I mean, we own some. That's how you learn. You buy it, you do it. Here's how you don't learn. You don't do shit. That's how you don't learn. You don't do anything because you're scared. And, or you put money to work and you learn. I mean, I started with 30,000 when I was doing that. And, quickly my dividends were like 2,000 and I got obsessed with that number. That's the only number I give a fuck. My balance, the available withdrawal, and what are the dividends. Don't give a fuck about the interest rate. Don't care about any of that because I can trade my way. I mean, I made $1,600 day trading this week. Plus we're collecting 8,000 in dividends. Plus I'm swing trading. Don't give a fuck about interest. That's me, yeah. And drop, the 30%, but it gets weird on how people define what is their margin percentage. For me is what is my available withdrawal? I want that to be 30% or more
of the net account value.
Yeah. Of your net account. And you got to remember however much you have borrowed. So like I have double borrowed. If the market goes down 2% and I got double borrowed, I'm probably going to be down 4%. So you got to remember that. Same to the upside, right?
Yeah.
Let's see.
Yeah, the margin gives you leverage.
I'm just looking at some of these questions. So, I mean, all the terms like, DRIP or NAV or closed-end fund, those are very easy to look up. And you need to start thinking, I think if you don't think of it, if you don't think of it as trading and you don't think of it as a fucking retirement account or that's not what it is. You could use it to retire early. That's what I'm doing.
Yeah, that's the point. To double or triple your income now, not in a retirement account.
So like, I have a house that I'm selling. I make $400 a month on the house. The house is worth $150,000. There's no mortgage. If I sold that and I put it in CLM, I could buy 400 fucking thousand of it. And guess what the dividend yield is? like 15 times what I was getting on that house, or 10 times. Now that's pushing it to the extreme. So you don't have to do that. You can back up on that, you know? And I'm daily bombarded with people that want to trade options. They want to trade options. I want to trade options. And none of them ever make money. And I would tell them, if you do this and then learn how to use options to hedge the downside, you're printing money. So now you don't need to know options for trading. You use options to hedge CLM, CRF, and so it's run up for Square or Misty. You could buy puts on MicroStrategy. And there you go. You don't have to sell your position. You protect the downside. But I don't care about that. I don't give a fuck about options. But all these guys that want to trade options, you could learn to do it and actually be useful for something. I mean, you know what I mean? That would be useful. You could protect your income. And so you could create in 18 months, I've taken mine from, it was a day trading account to almost 8,000 a month in income. And I still don't use it, man. I'm trying to jack it up. We're going to get yours to 6 figures. I mean, by the end of next year, you'll be over 100,000.
At least.
And you're not even using it. There'll be people still working going, oh, I don't know about that margin, man. Out there every fucking day, going to work. And it's just not, they're not open to any risk. Yeah, there's risk, man. To me, there's risk driving to work every day that I don't have. I can't even imagine getting on the freeway every day.
I can't imagine you either.
That's way scarier than buying a yield max fund. You know, I mean, that's how I look at things. I mean, I was in Iraq. This is not scarier than Iraq, I assure you. So when people start
driving in traffic is pretty close.
It's pretty terrorizing. I mean, to do it every morning, dude, I'd be like, what's up with this Defiance? Because Defiance is less scary than going to work, talking to people, dealing with a boss. You're going to fucking lunch. I mean, all that. Or you could just own some yield max funds and learn how to get loans. I mean, that's how I bought real estate. I would just get loans. You know, just get loans. I mean, let's say you don't have any credit card debt and you have good credit. You could borrow money to do this. I'm not telling anyone to do that. I can't tell you what to do, but that's what I do. I borrow money to make money. That's only scary to people that work for money. You know what I mean? Like this is a different kind of business. You got to change this is not your mama's 401k. It's not your grandma's annuity. It's not nothing from Bank of America. It's none of that shit. It is what it is. Go to your Bank of America and ask them about yield max. They don't know nothing. So this is not some shit you're going to learn from anywhere else other than just people like me. And when I send you guys a follow-up email, I'm going to recommend a couple YouTubers. I rarely do that. I don't want you watching them, usually, you know. But there's a couple guys. That Brad guy, I like him.
Yeah, he's good.
Yeah, I mean, he ain't competing with me. I mean, shit, I know the money flow. He doesn't.
Yeah.
You know, even the Todd guy, people think he's awesome. All Todd's doing is borrowing money.
Yeah, they didn't create a trading strategy or write a book. He's
got puts on the fucking silver. Like he was putting puts on things that are breaking out right now. So, I mean, you know, you can spend time on this or you can sit on the couch. And if you spend, right? This is just, I mean, that's the truth. And so, like I sat here and I had my wife and I was like, hey, I'm going to call off these tickers. And I pulled up my charts and I was making sure before I came on here that I had every ticker in there because they are constantly adding shit, right?
Yeah.
So as I'm calling them off, she doesn't know how to use stock charts, but she can push a button. So as I'm reading them off, she pushed the button, boom, we stay on top of it. But you'll have people go, I've been gone for a week. I don't even know what that means. What does that mean? You're running a business here, man. It says, can you list some stocks, ETFs, funds that pay weekly dividends? Yeah. I mean, we have an actual email, don't we there, Jess? The weekly ones. If you go to the Peters report, watch, I'm going to pull it up for him. If you go to the Peters report, you're not utilizing the resources. It is brand new. Jess tells me people don't make it all the way back here. You think that's true?
Some people might not. They might run.
Have you read this?
Yeah.
I wonder if people have read that. I can't believe there's people here that they may not have read that.
I made a Substack post out of it too.
I know. I'm fixing to write a new one. I only do like one a month. So I did my homework for Sunday. And I know we're not done. But here's all the weekly payers right here. And then there's an article right here. It says, learn more about new weekly dividend stocks. So you have a chance to follow my homework. That is amazing because I didn't get a chance to do this. I had to create it and develop it. So if I could have just followed me, I mean, in my home, I would have been much richer, much faster, or just sit on the couch. Let's see. Yeah. How to get paid every Friday in the stock market.
Yeah, so different. What would you call defiance and yield max?
I think
Different funds.
Yeah, they're a fund house. I mean, I don't know what the official name of that is, but they're a fund house. I mean, you need to get familiar with those. If you go to we were at the Defiance website. If you go there, you can enter your name and email, and you should. And you know what? If we go to Yield Max, which we should, yeah, don't ever buy shit without going to look at its website and stuff. A lot of people own these, and like you see here where it says announcing new distribution schedule. How could you know the schedule?
We can't see your screen.
Oh, hold on. All right. So where are we at? Let's see. Here. It says announcing new distribution schedule. Click here. I mean, how could you know? I mean, you just click here. Like you go there and you click it. And it's going to tell you for all their ETFs, the schedule date. It took me a minute to get my mind around this. You caught onto it faster. Group A, Group C, and Group D, right?
Yeah, if you scroll a little further down, then it has it by the group.
Yeah, has it by the group. And this is a better way of looking at it. So this is the first week of the month, right?
Yeah, so this week we're going to get Tesla, Crush, Gooey, Bybit, all those.
Right. And so they will go ex-dividend. Does it have it on here?
On Thursday?
Oh, there it is. Let's see. Is that when they go? But you can click on it and see. And so you can start to you could look at that. You could take time in your business and you could look at that. And we could allocate based on this. Like, I mean, Ybit is definitely not a stage one. ARC is not.
No.
Exxon's not. Snow already ran, right?
Yeah.
The only thing you could buy on this page, GUI's down.
Yeah,
TSM
GUI and TSM.
So TSM, let's look at that. Yes, TSM.
TSM. Yeah.
I have all of these in a folder. Ooh, look at that. That's a stage one, man. That's the money flow.
You could also buy Crush too.
Yeah, I mean, that's the money flow. Plenty of room to the upside. Do you want to buy this? Or do you want to buy? So if we look at Tesla, or you want to buy this? It's already ran, right?
Mm-hmm.
So we wanted to buy it down here, which is where we're buying TSMLY. And so you can begin to use some of your skills. Now, I haven't trimmed any of these because they're still above the 5-day exponential average. I mean, you know what I mean? I mean, they're just going higher. This is the Trump trade, man. And some of that gets into just reading the sentiment of the market. Remember, I've been saying for a while, don't trim any crypto positions.
Or the runaways.
Yeah, don't trim them. You got to learn when that's happening. The only way to learn that is to take your trader hat off and look at the entire fucking market and go, wow, what's happening?
Yeah, like the whole year was like about NVIDIA, and now NVIDIA's down and Bitcoin's up and MicroStrategy's up, and then obviously Tesla's up too because of the election.
Right.
And no
So
one's talking about NVIDIA anymore, which was basically the stock of the year.
So if you keep up with that, you can utilize that here in your business. I mean, you can track these, and you do more of this than I do, right? Trimming.
Yeah.
Let's look at Misty. You know, I mean, that was a big reversal day, but was that ex-dividend day?
Oh no.
No, that was just a reversal.
It might have though. Yeah. That was Thursday.
So and then that's well, how big was how big was the
It's
dividend
like
day?
$4.
Yeah, I mean, that's a pretty big drop. And then the crypto was down that day too. It's already come back some. And it's already back above the 5. You see that?
Yeah.
This thing's just going higher, man. You know, but it could be a stage 3, right?
Yeah.
So, I mean, if you were going to trim, not a bad time now, I guess.
Especially since it just paid the dividend too. You already just got it.
Damn. Yeah, the dividend's big too. Mine was $750.
Yeah, so you don't even have to trim it.
Yeah, I didn't bother trimming it because the dividend's so big. But if you're a trader, you can't help it. You got to click the fucking button because it went up. I mean, traders can't help it, man. They're not thinking about the income. They're thinking about the appreciation. And I would caution you on that. What our goal is I mean, if you do that, now you're just, okay, now you got money and it's sitting in there, but you're trying to make money. This is a business. And even if the balance comes down, the dividends can go up. You know that? Your balance can come down, but the dividends go up. So the balance isn't what I'm trading. I'm trading the monthly income. And the only way to protect yourself on that is to tier it. And so we want to use what we call anchoring the portfolio. And that's in the biggest, safest companies. For us, CLM, CRF, we anchor it with like 40 to 50% of your money, maybe 30% if you're going to be more aggressive. But what percent is yours in those two?
I got 16% in CRF and 16% in CLM.
Okay. And
then,
I would
and then I got 7% in PSEC.
Yeah. And I would say that's a little more, but you should be more aggressive. If you have less money,
But
you
I
should be
also
more
have
aggressive.
I have ECC 14%, gut 7%, bonds 7%. But the Defiance, the weeklies are 8%, oil 7%. But the closed-end funds, there's 14 to 16% for
Right.
all
Because if you
three.
add up the anchors, the Y, or you add them all up, that percentage is probably 50 or more, right?
Yeah.
Right. That's where you want to be, meaning traditional funds, not YMAX, not anything doing option shit, just regular funds, you know?
Yeah, there's also BizD.
BizD is a business development company, right? A BDCL.
Yeah.
That's what
It's a
that's
fund
called.
of those.
Right. And it sometimes if you take those funds and you look at the top 5 holdings, you can find stocks that inside that fund are paying 3-4% dividend yield higher, right? Like AG&C is in REM, but it pays 3 or 4% higher return. And those, you know, and you're willing to take on more risk because you're going to take on single stock risk. Then, you know, that's a way, again, you can manage your business and push that risk up, and honestly, if it's an uptrend, you may not be at risk. You know, like right now, they're breaking out. Right? REITs have been breaking out. If REITs are going to go up, is it risky to buy them? I mean, you know, so obviously you could turn around. Are you able to send your stock charts folder for this? Yeah, I'm going to give you guys my phone number after this. I'm going to put it in the replay that I send you. I'm going to put some links to some YouTubers that I think are doing a good job covering this type of stuff. But you got to hear, man, you got to hear me. You can't be in there buying regular stocks, growth stocks, you know, and if you're going to
the purpose is income.
Yeah. You know, if you're a good trader and be honest, if you're good or not, like you got to be honest with yourself, and you know, you can't cut it, meaning get out of the trade immediately. I don't give a fuck, man. I don't give a fuck if I lose money because the dividend yield stays the same. If I go in there and trade tomorrow and lose $5,000, my income stays the same. Right?
Yeah, you're available to withdraw will change.
Yeah. How cool is that? I mean,
Yeah,
that's
your holdings don't change.
yeah, that's amazing. And if the market goes up tomorrow and my account goes up 2 or 3,000, and then I get paid some dividends, then it goes lower. It's like it never happened. So this is the power of what we're saying. You can actually take money out of your account and be all in plus more and still take money out of your account. You can't do that in other accounts. Can't do it in your checking account. Can't do it in your fucking annuity. Can't do it in your 401. Can't do it in your IRA. Can't do it in anything. You have to sell something. But if you needed tires tomorrow and they're like $1,100, you're like, fuck, man, I don't have it. Oh, wait, I got a margin account that paid me $9,000 a month. I can take it out of there. Boom. You actually don't have the money, but now you can buy the tires. I mean, this changes people's lives if they let it.
Yeah.
I can't. I mean, I've been doing this for so many, over 20 years trading, and it's hard for me to sleep at times when I think about the possibilities. Or if I would have had this at your age, I would be all fucking there. I wouldn't take a day off. I would not take a day off. I would grind on those days. I would just pile fucking money into there because I never want to get in a car and drive to work again. Any day that I could not do that would be a glorious day. But a lot of people are used to it. A few questions. Best resources from you to learn as soon as possible. We'll be purchasing the money flow system book. Yeah, I mean, you got to buy the money flow book or none of this.
But he's asking like there's two available, the money flow trading system ebook, $47, and ebook on the learn the art of chart reading.
Yeah. I mean, the one is just
Once a course on how to read a stock chart and set up your stock charts. And
yeah,
then
that's my
once the
stuff.
book, yeah, once the
Which pretty much goes through the money flow. I mean, it's 12 videos and like 50 pages. You want both of those, man. If you got to have one, just get the book.
Yeah, I have both.
Let's see. And yeah, Sean, I can send them over. The biggest thing, man. God damn, why do I keep doing that? The biggest thing is, yeah, you just go to, what is it, GeraldPeters.com, GeraldPeters.info. And then when I send you guys a PDF, I'm going to send you links to, I mean, I'm sure everyone has them, but I try not to assume everyone knows everything. So links to yield max, you should look at those. And then you can, if you're using stock charts, you can set these up. And another way to offset erosion, this is the biggest thing, dude. When I put this on Instagram, I don't know if you got pushback. I get pushback every time. Oh, yield max goes to zero. The erosion will kill you. And I'm like, bro, we got people in the money flow gang that are up 48% on the year, fully fucking margined, holding yield max defiance and CLM. I don't know what to tell you, and they're like holding their index fund. But if you want tires, you have to sell shares in your Vanguard index fund, right?
Yeah.
That's the only way to get the money. You don't have to do that here. So, I mean, to me, that's a total game changer. But again, this is not, but an example would be, what's the Amazon one? Or not Amazon, but the AM, what is the AM?
AMZY?
No, not Amazon, but the
AMDY?
Yeah. That's the
AMD?
What's the other one though? AMDZ? No, you?
AMZU?
Yeah, the 2X one.
AMZU?
Oh, that's it.
AMZU?
I should have that memorized. I do. I don't know why. No, that's the Amazon one. I'm talking about the AMD.
Yeah, AMDY. AMDL?
AMDL. God damn. I'm sorry. Now, this is the same thing as AMD, right?
Mm-hmm.
Except it's $10. And AMD, where's AMD? Is $138. So AMD was up 0.63%. AMDL was up 1.28%. That looks like 2X, right?
Yeah.
So this moves 2X. I think that would offset some erosion. of AMD1. Because one of the biggest arguments that people say to me is, well, you'd make more if you just own the stock.
Well,
fuck.
another way is to add on stage ones to prevent the
Yeah.
erosion.
But they don't know nothing about stage 1. So I'm arguing with dummies.
Yeah, that's true.
And if we know stage 1, instead of buying AMD, we could buy AMDL, which is 2 times. So if holding AMD beats the option income, then holding AMDL would beat it by 2. I mean, based on his logic, right?
Mm-hmm.
Right. So, but again, they don't usually have trading skills. So if you have the 2X, you don't need to buy as much. You don't need to buy a shit ton of AMD just to catch a boom. You could buy a little, it's 2 times. Now, because of margin, maybe you do buy the regular AMD to offset the erosion that can happen. So you would buy it on a stage 1 when it's about to break out, right?
Mm-hmm.
Wow, it's like a business. So there could be a certain time to buy products in your business that would make you money. So I think if you look at this like a business and not as trading, and not like you normally see dividends, don't get too fixated on your interest rate. The most important thing is having the right account.
Yeah, I don't think me and you have ever spoken about an interest rate ever.
No, it's everyone I talk to brings it up.
I don't think I've asked you, and I don't think you've ever brought it up.
They do this with real estate too. It doesn't matter. It's just whatever the rate is, dude. You don't have enough money that it matters. You got guys with $2,000 worrying about an interest rate.
Yeah.
It's like, bro, you need 200,000 before it's even a concern. So your first goal is $100,000 frees most people that I know from their job. It would. Now, what happens in the future? I don't know. I don't think anybody that owns a business knows. I don't know. If you own a McDonald's, what if everybody stops eating hamburgers? I don't know. I mean, you don't know. I mean, nobody, so,
yeah.
I have a guy, when he texts me, what did he ask me? This is the guy that shouldn't buy it, by the way. Did I save it? Oh, man, I was hoping I saved it. Let me see. Oh, maybe you're on here, sir. It says, how risky is this? I don't know. You decide that, sir. How sure are you I will be getting these returns for a year? Nobody knows.
No one knows.
If Warren fucking Buffett says he doesn't know what'll happen tomorrow, a YouTuber or an Instagrammer does not know. Jesus, based on you're educated. I don't even have a fucking college degree. I'm not educated. All I've done is look at charts and take trades. I took lots of trades. That's what I've done. Based on your educated guess, do you believe these stocks will go up or down for the years to come? He wanted to know all this before he got in here.
Wow.
And if so, would they be providing dividends? Gerald, can you read the future? No, I can't. What would be the worst case scenario? They go to 0.
Yeah.
I'm genuinely asking for educational purpose, as I would be putting my entire life savings in.
Oh my God.
This is a drama queen. It's all in or all out, man. There's no in between.
And what if his life savings is only $2,000?
Right. And what does that mean, life savings? You're 24. You ain't even been alive long enough to have any savings. You need to be taking risk right now. I mean, there is a time to take risk. And when you're 25 is not a time to be sitting on cash, avoiding risky things, man. That's the time, man. God damn, if I could do it all over, man, I'd be all, dude. Man, oh man. Tell them to put it all in red, right? Yeah, but I mean, I gotta be honest with people, and I gotta, I don't want to be a dick to them. I want them to buy because I know if they don't read my book, you don't have to die broke. If they don't do this, if they don't get in with us, they're going to join someone and they're going to lose fucking money. They're going to be over there shorting penny stocks and buying binary condor spreads and other dumb shit. That's what they're going to do if they don't do this, And I got people that trade options telling me this is risky. Yeah. I'm gonna send them links to. I'm gonna try to find my video that I was too scared to put out. When I first started doing this, I didn't really know how to talk to people about it because it's kind of like giving kids fire. It really is. You could take 50 grand and they'll give you 200 and you put it all in tomorrow on whatever and then walk away from your computer. Right? You could do that
Yeah.
and lose shit ton of money just like that. Or you could do like we're talking about, where you take that money and you use intelligence and you find stocks or funds we're doing funds. The money's anchored in funds, not single stocks. That's going to give you a lot of risk protection. And they pay dividends. So if they go down, that's good. We're going to get more dividends at a lower price. And you just build it up till you're ready to take some. And, it could be different month to month. Maybe this month you need help. Remember we were talking about, what was it, your student loan? And I was like, pay it out of there. Like connect it to your account.
Yeah, I just did that before this.
Yeah. And then take the money you were paying on that and put it in this. And then start buying weeklies with them. But yeah, I mean, man, what if you did that, bought weeklies with it? Because it's going to come out of your margin and you're just buying fucking whatever the payment is, you're just buying weeklies with it.
Yeah. I just literally connected it before we started.
That weekly income. So 50% of the portfolio in the anchor is set to always drip. I mean, at least drip CLM and CRF and any of them that drip at the NAV. ECC supposed to, but I'm not sure if mine did. The other half and the yielders are never dripping because those dividends into stage ones.
Yeah.
Yeah, he's got it. Never sell anything. Am I close?
Perfect.
That is the basic philosophy right there. And keep that available to withdraw at 30% of your balance. Let me pull that up. I mean, once you break it down, now I think what we do, and we've got it. I didn't even mention that, but we got a newsletter for this. Or we're going to be looking at, our portfolios, the way we're handling ours. And, I can just show you what I'm doing. And then you can, if that helps you, great. It may not be what's good for you, but it gives you a template. It gives you something to look at. And that's, everything in life, you're just learning from somebody else. Everything I've learned, I learned from a book, of course, or what somebody else was doing. We're not going to invent anything. And, I came across this through several people. And like I told you, man, it's almost like you're eating bread and you're eating meat. And then someone goes, you can put those together. And it was so simple and obvious that I was like, wow, goddamn, why haven't I been doing this? I could put those in, and then use my trading skills and I could hedge it. But like he said, you could just build it out, keep your percentage. Even simpler, you just M1. But the thing the M1 is for people that don't want to put much effort into it, right?
Yeah, but M1 doesn't drip at the NAV.
That's the thing. I don't know that means much to someone who doesn't want to put much effort into it. That's because we like that because we're actually trying to run a business. And if I could make more money, that's my job at running the business. So I don't see this as retirement. I don't see it anything like that. I'm putting money,
You're creating another well. Yeah.
And to make it what really hit me when I'd had this going for 6-7 months before I started talking about, where's this? This is when it hit me. I looked up what the average loan was at the SBA, and right now it's $458,000. 30% of those people are out of business within 2 years, and they still owe this money. There is no way in hell I would buy these stocks if I thought there was a 30% chance they went to zero. That's the main one we're investing in. They've been around since 1987. Okay. I don't think I don't think that's going to happen. And then on that business, what is the average? And obviously it's going to be all over the place, but they're saying after they pay their employees and pay their loans and all that, between 70 and 100K, a lot of small businesses lie. And in Texas, it's about 119. That same money put into here doing this strategy just is a little over 40,000 a month. And you know how many employees you got?
Zero.
Inventory, you got some stocks to look at. We got some charts we look at every day. You just kind of look for the new stage ones. Collect dividends almost every day. There's no schedules. If someone calls in, you don't have to go. You don't have to get in your car, and you would collect 40,000. But the average business owner is making 100,000.
Yeah, not much.
So it's 4 times more and less likely to go to zero. There's no way in hell I would take money and open a business when I know this. I'd take that money and open this in a second. I mean, honestly, personally, I would borrow on my credit cards at 0%, and I would put it into there, and I would learn this strategy, and I would not do dumb fuck things like you've done in the past. I would stop with the fucking options and all that. Stop wasting time. And I would get as much money in there, diversified, tiered, like we talk about, anchor, tier 1, tier 2. And I stopped being a wussy, and I'd get on that shit immediately. Exactly as I'm doing as an older man. If I was younger, it is all I would be doing. There was no reason to go to college. I mean, once I saw this and saw how fast, I would be doing nothing else but pushing that in there. These guys won't do it though, but I would. Got to check more on the brokerages here in Canada. See if you can drip that quick research. And it says, but I mean, that's not a deal breaker. It's just really great if you can. So basically, with all the risk involved, you never go below zero. Well, bro, if we have fucking nuclear war or zombie land or all of the stock market goes down, I guess it would go to zero. But I think if that happened, that doesn't matter anyway. And here, I don't know if you know this, a YouTuber or an Instagrammer can't tell you that.
Well, anything you buy goes to zero, basically.
Yeah. I don't know why people worry, because they go to dinner and they eat it. It's gone. It's gone. They go to Walmart, buy shit, throw it right in the trash. It's gone. People spend thousands a month on shit. It's just gone. And then you ask them to buy Bitcoin. They're like, man, I don't know. People's risk parameters are wrong, man. Driving to fucking work every day for $52,000 a year, that sounds shitty. There's no way I'm doing that if I know this. You can make that with 70 grand in here. You got to be aggressive and learn some shit, but I mean, I would do that in a second, man. Oh, I almost said a name after I told you. He says, "Are you taking one-on-ones this week?" Yeah, I taking one-on-ones. And I'm gonna send you a PDF of this where I'm gonna break down. I'll give you you should know E-Trade, and then I'll give you the brokers that links to these sites. Most of you guys know these sites, but you would definitely, if you're gonna do it, you want to get emails from them. You want to learn about ex-dividend day. Right? Ex-dividend day, the fund drops, right?
Yeah, if you're on the email, you get you get the distributions each week or every month.
And you watch it, right?
Yeah, you get each week. You're gonna get an email with the distributions per share.
Right. I never did put in. Hold on, just a second. And so we share those with you. The are your dogs giving you problems?
No, they're fine. They're just moving.
Let's see. No, we're putting together another Substack to track these better and to help people. I mean, we do this in our Discord. Some people don't like to hang out in Discord. That's cool. But we're going to start sharing my actual portfolio, and soon maybe Jess will share hers. From the only Go platform in Canada is Wealthsimple. Well, then you work with what you got. Canada's got its own closed-end funds. They got their own dividend shit. They got their own margin rules. So just read up on them. Yeah, Daniel, I don't see how you go to zero, but I mean, anything is possible, man. Yeah, and in this, I guess, that's pretty much what we're going to try to talk about in the Substack is going forward. It's only going to be one email a week, right?
Yeah.
Unless we make some moves. If we make some moves, we'll let you know why. Not so much like a stock trading thing, but just why we might be adjusting the portfolio and then trying to explain things to people, dripping at the NAV, margin. If margin increases on E-Trade, I'm sure we're going to let you know that on notes. That would be stuff we would let you know. If you can buy BITO for 50 cents on the dollar at M1 and you want to buy $10,000 worth, you might want to open it up over there. So as you work on this business, you can, says the dividend tracker app website is a good resource to keep track of dividends and payment dates. Absolutely, man. Yeah, I've never used that. I don't really track them, man. I just go look at what it is. And E-Trade, you know, you just click the little button. It'll tell you what you have for next week. And if you're not tracking your dividends, you're not running a business. Like, it's a business. You should know what you're making next week. That's a beautiful thing. If you run a restaurant, you don't know. I can tell you exactly how much I'm making this month. If we pull this up. Hold on. Show them this. So if you're at E-Trade, it's different everywhere, but if you just click estimated income, bam, for next year, and let's see next week, bam, 2,800 and what does that say? $2,827 just. That's not bad, right?
No.
I'm not working. Like I mean, that business just takes a little bit every day, right? You just got to look at it. I mean, it's fucking exciting. I'm excited, dude. I'm trying to get that shit to 5,000. I mean, dude, this has nothing to do with my real estate. Here's the crazy thing. In 1 year, I've doubled what has taken me 17 years of buying regular stocks. In 1 year.
Yeah.
I doubled it, almost tripled it. I mean, or just spend 17 fucking years saving. I mean, if that's what you want to do. But when you begin to see that now, you know, hey, like my man says, what if it goes down? I don't know. I don't know what to tell you, man. What if Hasbro goes down or fucking McDonald's? I own those too. But here's the thing. I didn't sell my houses to do this. And I didn't go sell my McDonald's. I didn't sell I kept all that. I have all that stuff over there. I'm not rolling my SEP IRA into this. I'm not doing any of that. I put my day trading account. That shit that you do playing with options, put that in there. All the video games you're buying, put that in there. All that stuff, man. If you're a guy spending money on women, bro, you better get it in here. Or same for women, man. Like Steven, I know what Steven makes. He could retire in 3 years. That's not even in his mind. He's not even thinking that's possible.
He might now be.
When I say retire, I don't mean you're done working. Shit, I'm retired. But you're going to do other things. Now you can really make some money. If you can make what you make at work and you ain't got to go somewhere, now you can really make some money. Or like Vernon says,
hookers and cocaine.
Yeah, I might. Yeah, that's a good way to do it too. Okay, so if you're in Canada, I mean, I don't know, man. Everybody always asks me about that. If you go into Discord, you can go in there and you can click at our international and boom, international. People help each other. They answer questions and shit. I'll put the percent in the thing that I'm going to send you. I'll put the percentage. You know, and again, people ask me all the time about the margin percent. I don't know. I don't know what that means. All I track is my available to withdraw to my actual fucking balance. And I want that to be 30%. You know, I mean, simple as that, man. Oh, I didn't even have it on there. Sorry. Jess is getting tired. 153,000, 15,000 available. That is not 30%. That's 10%, right?
Yeah.
So what would that be to be? Let's see.
You would need 30% of 153,000.
Let's see, times 0.30. So it should be 45,955. But remember we talked about if we go down there and I remove all my shit that's a swing trade or
you got a big bonds position going on.
Yeah, that's obviously a hedge. So I have that right now. If I click the button, retire in 3 years, I'm gonna see from. Yeah, man, they don't believe it. Fuck, I retired in 1 basically. I replaced what I was making on my houses in 1 year, and I ain't even sold the houses yet. How about that? Now I get to sell the houses and keep that money. I mean, that's fucking amazing.
Yeah, that's awesome.
Yeah. Now I have
Yeah, I
20.
started mine in July, and now mine's already at 17 grand per year.
Dude, it's going to be over 20 by the end of the year.
Yeah.
By March, you're probably going to be at 40, 45.
Yeah, that's
Yeah.
crazy.
To 200, you'll be like, man, I'm not really working at this MFG thing anymore.
Peace
I got
out.
too much money coming in to do that, man. But it all comes down to that, man. You got to tier it. Don't get stupid, trade it. And then if you're like us, if you learn some trading skills, why would you not? If you don't have to drive in, why couldn't you just trade? I mean, that's right. You're just gonna trade at home. Why would you not do that?
Yeah.
It's the best fucking job in the world.
I can't imagine you getting on the highway every day.
No, and you've been living my life a little bit. Once you're doing that, it's like, man.
Yeah, I was barely already doing it. Like I already
Yeah.
had a weird work schedule before.
Right. And so, yeah, you were already taking 3-4 days off at a
Yeah,
time.
exactly.
And I haven't been in one in so long, man. I can't even imagine. Like I can't comprehend it. Especially knowing what I know. And then everywhere I go, nobody wants to listen. They don't want to listen. They just want to work, man. Right. And so, yeah, we've been going for a while, man. Anything you think we didn't cover? I feel like we covered the funds. I'm going to put a link to a website that analyzes closed-end funds and the funds we're using. I'm going to screenshot my portfolio, and mine's just an example. Don't think it's like the right. And you're going to see some shit. I moved shit in there that I was down in, so that kind of hit my return on that. And I'm not even care. I don't even give a shit about.
Yeah,
the
we don't
return.
care about the return and it's
What is my
income.
dividends? What is my available to withdraw? And what is my balance? I just want to keep growing those. They say he's trying to retire and be my secure. Oh, is that? Yeah. Okay. Yeah. And then,
So Max said he's made more in dividends and appreciation than he did working this summer. So he made more money in dividends and appreciation in his trades this summer than he did working.
yeah, of course, man. There ain't no money in working. People don't get it. They think there's
Dude,
money in working.
Dylan wants to be your personal driver.
Yeah, there's no
He's
money.
supposed to be driving in the car with you, not driving it.
Yeah. No, I need a guy that's done at least 10 years federal prison, neck tattoos. Man, I want to. Yeah, that's who I'm looking for. Yeah, that's it, man. Anything you can think you would add as a new person who started doing it? If you could do anything different other than you to listen right away and started sooner?
Yeah, that's it. Just make sure when you open the account, you're opening a margin brokerage account.
And do it at the right place. If you're not going to pay attention a lot, don't think you have skills and you're just big crybaby and scared of debt, use M1 Finance. But if you want to, if you're a trader or
Yeah,
think
if you
you're
want
going
to
to
do it the right way, get E-Trade.
get E-Trade, and then you can drip at the NAV. You can do all these little tricks to make more and more money, and then you can be cool and start making some money, man. And yeah, the market is high, and if you're worried about that, just put some in and wait. It eventually comes down. Everything goes stage 4. We have a plan for that, right? We know how to do that. We know what's up with that. And then we wait, and then you start buying on the stage 1s. It's easy, man. Combine this market sentiment, doing your homework with the money flow, and stay on it every day, and you keep pushing money. I'm telling you, man, you'll be at 6-figure dividends so fast, you'll be bitching about the taxes. Says, okay, Sean says, Jess, you make $17,000 per year in account balance. How much is or in dividends? How much is your account balance?
34,000.
Oh, like 50%.
Yeah,
Yeah,
but I'm borrowing like 10 grand.
You're only borrowing 10. Are you sure?
Let me log in real quick.
No, you got to be borrowing more than that.
Not 10.
But you started with 2,000, and we've been just slowly adding. Because I remember it wasn't even a month and a half ago. You were at like 12,000 a year, and I was just at 7. I mean, shit, it wasn't that long ago.
My net account value is $34,081. My margin debit is 28,000.
Yeah. Okay, I thought so.
Yeah.
Yeah. To get a 50%
Yeah.
You
So my
almost double
overall,
your
my
account.
total
Yeah.
62, but the net account value, like my own money is 34,000, and the estimated income per year is $17,222.
I guarantee you. And I bet if we look at how many months it's been, mine was growing exponentially by like, it was like $1,500 a month, a week. Like every fucking week, it was growing by that. Now I was putting some in, but when you get 9,000 in dividends and you don't use them and you push that whole thing in and it buys 27,000 of it can grow exponentially. But I do want to caution people. I think, I've said this a bunch of times, but I do feel like we are, we're up there. Wouldn't keep me from buying, but the only reason I caution is pay attention to your available withdrawal, because if we do a good sell-off, you don't want to have to lose income. Make sure that you're flipping out of trades and your income stays the same, right? That's when you have a problem. When you're that
Yeah, I mean, I
leverage,
wouldn't even worry about trading until you got the anchors and all that.
right? But let's say you do know to trade. Sometimes you can get
Oh.
crazy. Or I've had people go the other way. They're very close to that, but it's all in income. So their income is like 70% on there. It's like, bro, you're gonna get a margin call. You got to be able to, your balance. You got to be able to handle a week of pullback and not pull you out, man. Because when you pull out, you're going to take a loss of capital and you're going to take a loss of income. You don't want to do that, man. You don't want to do that at all. Yeah, that's good. I appreciate you helping. Hey guys, I'm going to give you my. You guys can write it down and send me some if you have questions going forward. And you can. I'll put it in the next email to you. Need me to take you down?
No. Just letting the dog outside real quick.
She's gonna take us on a tour of her house. This is a bonus. It's free. Are you guys growing marijuana?
Nah, it's like some fake plant.
Yeah. I think they're growing weed. When I was a kid growing up, my friend Brian's mom was a hippie. I always thought she was cool. And they had this big Christmas tree in their living room. It was a giant weed plant. I didn't know that until we got a little bit older. And then you realize that wasn't a Christmas tree, bro.
It's hilarious.
What's Vermin say? He is what?
He's growing weed?
Oh, yeah. He's in California. Everybody is. And we have all the emails, right? We have all the emails of everybody that was in the thing. Yeah. Okay. So I got some stuff to send them. All right. Vermin says lots of weed. MFG, lots of weed. It's all legal out there.
Damn, mail is some. What the hell?
Yeah, why is he hogging it all, man? She says, funny, this strategy is a pothead's dream. I mean, it kind of is. If you just wanted to make money, but you don't have to do all the trading part we're talking about, like trimming here and adding there. You could just balance it by percentage.
Yeah, you don't have to sell anything ever. Right.
And you just keep, if something that was 3%, you want to keep it 3 to 5, it runs up. Now it's 8, sell a little bit and add it to something that's down. I mean, you could make it that simple, but if you do have trading skills, it will exponentially but sometimes you can use those trading skills to fuck yourself too. Because
exactly.
You can not even overtrade, just get the trade wrong by thinking too much about it. I appreciate you coming on, man. I feel like there's something I didn't cover, man. We cover what a margin call is, right? When you have when your available withdrawal is 0. I mean, it's a margin call. E-Trade doesn't have the fancy shit that M1 has. Personally, I don't want to hold much in the account that has 100% maintenance margin unless Misty pays a shit ton, Coney pays a shit ton. I might make an exception for them. Yeah, no shit. How much Tesla do you need to buy? I bought as much Tesla as I need to pay my valet parking in New Orleans. Yeah, I think we covered about everything, man. I didn't get too deep into the margin because it's a little bit different every platform. And if you go read it, You know, and they all have an estimated income, so you can check how much you're making, and you should be checking every week, every month, and then every year. We talked about having more than one margin account. See, Robinhood would be cool. M1 is cool. Fuck, they're free to open them. And then like if I was buying Bitto, I did that. I buy it all in M1. I wouldn't buy it in E-Trade. You need at least $2,000 to get margin. 2 is going to get you 4. Actually, it'll buy you 6 at E-Trade. And I would run that pretty hot. I mean, wouldn't you?
Yeah.
You just put more money in. I wouldn't get as worried about like we are when you have
Yeah,
bigger.
if you get a margin call, you can just transfer more money into your account.
Yeah, and if you're starting that small, I would hope you got a few bucks to do it with. I wouldn't get too caught up in interest. I mean, once you're going and good and making money, if you just want to chisel that down, you can. I mean, one swing trade take care of that. You anchor. I'll send them a list of anchoring stocks. And then if you're in Discord with us, I mean, we have a channel devoted to this, and then we have a new newsletter coming out, and I'll send that to you guys. It'll come out once a week, kind of show you what we're doing with our accounts, and it'd be a real money account. How much money I'm making, I'll document it in there and show it to you not in real time, but on the weekend. You email us a screenshot of your margin portfolio. Absolutely, man. And, Jessica, I'll show you hers too, because some of you probably have a smaller account. I don't know who has the smallest. Somebody does, I'm sure. Or the biggest. There's people that's way bigger than mine. Their dividends are massive. So there's people all over the different. Anybody can do it, right?
Yeah.
But yeah, I'll send you those, and I'll probably put it in this PDF. I'm gonna send you out tomorrow, and I'll link to this new newsletter we got, and then show them, for taking this with us. I'll show them my current one and show them yours, and obviously mine doesn't have to be yours, but it can give you an example of what we're talking about. Is that
Sounds
it?
good. Yeah.
That's it, man. I'll let you go. I can hang for a minute if anybody's got any questions. How long will this be up for review? I was going to leave it up for like 14 days. How often are you taking withdrawals from your margin account, or are they compounding the dividends, letting it grow? I've used money a few times. I'm trying to grow mine. You?
Yeah, I haven't used mine yet.
Yeah,
But
I mean, I had it until recently. If you don't need it, compound it. They sound like they're killing each other.
Yeah, they just went nuts out of nowhere.
And you can get it to where you need to get it. I mean, if you need 7,000 a month, I would try to get it to like 9,000 before I started using it consistently, because you want extra, man. You want it to keep growing. I would think, at least 20 or 30%. That guy Brad, I was going to link to him. He's retired. He's living on this shit, and he has 20 or 30%.
Yeah, there's a margin channel in the Discord.
Yeah, it's a private channel.
He's saying other than extreme yield. Yeah,
yep,
this is the dividend margin channel.
Yeah, we got one. Adrian said, why put Bitto in M1 instead of E-Trade? Because you can borrow against Bitto in M1 50%, which means you could buy 50% more with your money. E-Trade, you can't. It's 100% margin. Because I want to use margin. I want to use that margin to make money, man. Because the dividend yield on Bitto is like 47%.
You don't want to tie up all your money.
Yeah. Right. And we get to 40, you would get 47%, right? You would get double the dividends, and you only pay 6% for it. So that's what this strategy is. We're borrowing to make more money. Thanks, GPHS. Absolutely. So yeah, Dave, if you hit me up, man, if you're in Discord with us, you can send a text and we'll get you in there. So very cool. All right, man. I appreciate you coming on and helping us.
Thanks for having me. Thank you guys for signing up.
Yep. You guys be good. I'll send them the stuff on the new newsletter and stuff we talked about, and probably a link to M1 and all that. Peace. M1 is a regular brokerage. You can withdraw money from the fund whenever. Yeah, M1 Finance. It's actually a pretty good broker if you aren't a trader. It's more of a buy and hold kind of thing. And you can borrow against M1. You decide when you use margin there. You borrow it out. So if you could have all your money invested, and instead of selling shares to buy something, you could borrow against your shares, because what happens, a lot of people is they have to keep starting over. Now, that's not a way to live, but you could do that. But instead of doing that, if we get our buckets right, instead of borrowing against it to fix an emergency, what if we borrowed against it to buy an asset that pays 3 or 4 times what we're borrowing? And then if we use our trading skills and borrowed at the right price, and then we use our management skills and we diversify the portfolio and we anchor it into the least risky, and we recognize the difference between a single stock ETF and an index ETF, and then we can tier it, and then you can spread it, and then you'll be diversified and you'll make money. You could borrow money from M1 to add to E-Trade. I don't know why that's getting kind of weird, but you could, yes. You could, yes. You could also just move your shit from one to the other. You don't have to have both. You want to think through why you're doing what you're doing. The only reason E-Trade is more of a professional trader app, and you get to drip cornerstone at the NAV. And we talked about that in the beginning. If you go back and watch it, it is a big difference if your dividends get big. It's instant 20% bonus every time. Thank you. I've been following you since 2019. Yeah, man, I appreciate you guys. And yeah, you'll be expecting a PDF from me, either tomorrow or the next day. I'll try to do it tomorrow, but if it may be one day, kind of recap some of the stuff we talked about, links to some stuff. A couple of YouTubers, I think, do a pretty good job at covering this type of strategy, and a little more about tiering it, and using proper percentage. Terrell, yeah, that was something that I told Jess to do. She's paying on her student loan, so the brokerage account comes with a checkbook, and so you can connect your student loan to your brokerage account and just pay it out of there. And when you pay it, you're going against available withdrawal. You don't have to sell any shares, so you can be all in collecting money and have borrowed money to collect money, and still pay your student loan out of that. And then take the money you were going to pay your student loan and put it into there, and you'll come out net ahead if you do it right. Yeah. M1 is easier. Yeah, I'm going to send you a list of of stocks, and I'll send you a list on my portfolio. Just remember, I consider myself a pretty good trader, so I'm running mine a little aggressive. I'll try to mark that on there if I can, so that you can see. And then I'll see if Jess will let us share hers. Pretty much mine, just 5 times smaller, And we have people in the group that are just all different phases. And I asked some people to show me theirs, but I hid their account number. I'll put some of those in there, and you can see what it looks like. Yeah, man. I appreciate you guys. You'll have my phone number. Feel free to text me. I put it back up there, and man. And I'll send you a link to this we saved the video. Okay. Peace out. Appreciate you guys doing this. And yeah, man. Hope you get on it, man. It keeps me up at night. It's growing so damn fast, It really does. God bless. And hey, man, don't forget, whatever it is you think about comes about. Whatever it is you focus on grows. So you get on this and you start focusing on it, I promise you it'll grow. Right there. You saw Jess, young lady, almost half my age. She's doing it. We got people 10 years older than me doing it, all different ages, all different things. It's working pretty good, man.